Good morning, everybody. It's Monday, the 26th of January, 10:36, at least here in the morning in Berlin. Welcome to what I'm almost tempted to call the Gold Show. The Gold Show with gold yet again. And I think that's like the fifth or sixth time in a row when I'm live streaming here for the Fivers. Gold making a new all-time high. It's, really, really crazy. Currently trading at almost 5,100 US dollars. So actually, all the targets we've heard from the banks talking about Q4 targets of 5,000 plus have already been squished and squashed and obliterated. And we will, of course, discuss here on the show today how this is most likely to continue, if this is a bubble, if it's not a bubble, how to interpret all of this. There are much, much more things also going on in the markets today, especially if you are trading yen pairs like US dollar yen, for example. You might have noticed that the yen since Friday has quite had an uplift, plus 3% there. So a lot of going on. Let's first look who is already joining us. Fivers is having a lock-in problem. Please fix. Yeah, that is being fixed. If it's not already fixed, it should be fixed soon. Yeah, exactly. Gold, right? This is like what everybody probably is talking about. At HB23, how you doing, man? Good to see you. And yeah, important here, comment from ourselves here. We are currently at 95,800 subscribers. Let's start the week strong. We want to hit 100,000 subscribers so we finally can get this super huge giveaway out of our system that we have planned once we reach 100,000 subscribers. So if you have not already, leave us a like. Well, that's something, of course, you should do anyway, always, but especially also subscribe to our channels. 100,000 is the target, so we can have a huge celebration and giveaway. Teola traders, good morning, everyone. Good morning to you as well. Good morning, unbiased trader, one of our regular ones here. I hope everybody's doing, and of course, a special good morning also to all Arsenal fans from if any, yes, from I'm Biased Trader. Well, I'm a Hamburger SV fan myself, not really fan. I'm not that much into soccer or football, as we call it here. But if there's like one club in Germany I would support, it's Hamburger SV. Despite me living in Berlin, that is. Good evening also to Australia, to Henry. How you doing? And we have Ash Viral 44 with us. Hey buddies, what about gold? Sure, we'll start with gold in a moment. Also waiting for LJ to join us soon here. I can see he already logged in the background. We have Dishon Okech. Good afternoon to you also, my friend. I hope you're doing fine. Yongyi 35, crazy trend. Well, I assume you're referring to gold. Yeah, it's really beyond everything that we could have anticipated, really. Good morning, team. Good morning to you as well, Louis. Good to see you as always. I hope you're doing fine, man. And it seems like we have a Manchester United fan here. So I hope not too much beef between you and Unbiased Trader. Probably not the best friends, Manchester United and Arsenal. Just hearing here from LJ also that he has issues with his microphone, but he should be here very, very soon. And last but not least, good morning from Ethiopia, from Ed Set for Ethiopia. Good morning to you as well. I hope you're doing fine. I hope it's going to be a profitable week. So I think the question, obviously, that I have to ask you guys first is, who's long gold currently? Anybody has been rising this wave, this unbelievable exponential trend we are seeing? Well, not only in gold, of course. If we mention gold nowadays, we also have to have a look at silver as well, which is even more crazy, trading at $109. And it's far beyond everything we have with our standard deviation channels here. Not only silver, that's true for gold as well. And we will later on, what at least I'm going to share a little bit my opinion, what I like to do and what I don't like to do in a situation like this, where you just see things going off as a rocket. As somebody who has been trading actively cryptocurrencies for a long time, of course, it's kind of the setup you are used to, but on more classic assets, well, I mean, gold is the largest asset class in the world that can be actively traded, at least, and you don't really expect from a legacy asset something like this. But there are, of course, reasons to that or for that, and we're going to talk about them later. First, let me know, guys, are you actually trading gold right now? Anybody of you have been trading this wave? Has been maybe entering the markets a bit lower at 5,000 or 4,600 or 4,800 and held onto this position. How are you doing there currently? Did it make you pass maybe an evaluation phase here at the fivers? Or are you like me, standing a bit on the sidelines with your mouth gasping open, like not believing what is actually happening here right now? Or did you maybe even try to go short and hopefully had your stop loss in place that your accounts didn't get obliterated? Well, first and foremost, of course, the reason for what we are seeing currently in gold is a geopolitical one, right? We have, despite Trump last week in Davos, in my opinion, at least being a little bit milder on his words. I remember especially him saying we are not going to use military force to take Greenland. Despite that, what is in and well, first of all, of course, it's Trump saying one thing. The next day he could be saying something else again and totally forget about what he said there. I think his speech in Davos was, to put it mildly, a little bit incoherent anyway. So you never know with this guy by the end of the day. But what they are keen on is, we in what form ever need gold. Gold they probably need too, but we need Greenland. And I see here short at 5,097 for our friend from Ethiopia. Okay, currently up with that, but man, be careful, be careful. I hope you have a stop loss in place, that you don't get obliterated in a position like this. So be careful. Important to always have your stop in place there. Of course, if it goes down again, can be massively profit trade for you as well. So back to Trump and Davos. The thing always about Trump is, what kind of came after that, right? We had then the beef because the Canadian Prime Minister actually had some really stern words in his speech in Davos concerning Donald Trump and what was the retaliation from Trump about this. Something like, we're going to tariffs again, tariffs on these people, tariffs on those people. Macron says something bad, tariffs on French wine, 200%. So it's like it sometimes feels like the school bully trying to force the money out of the kids that are not as big and not as strong as the school bully. That's like kind of a picture I always get from Trump. However, of course, that kind of because he rarely really pulls through to the end with his tariffs, as we've seen in the past, with exceptions, of course. In my opinion, that also shows that it's a bit overused, this threat of tariffs, and people have a hard time, especially leaders have a hard time believing him. And we saw that over and over again, that the wording from leaders, for example, from the European Union, gets more and more harsh and direct in when it just LJ, LJ, how you doing?
Hello, hello. How are we doing?
Good.
Happy Monday to all.
How could it not be a happy Monday? With once again, always when we stream, we have a new all-time high in gold. It's like
Yeah,
difficult this
wow.
time. And I already said in the beginning of the stream, two things, of course, we need to talk about. I started now with gold. The other thing is going to be the Japanese yen, where it seems like things are finally starting to move a little bit. More on that later. So what we've been waiting for so long now is maybe coming into action right now. I said it right now. I mean, as we repeated over and over again in the past, what we're seeing here in gold is symptomatic for markets that in any other circumstances would be massively risk off by now. Yeah, we have, despite the military threat of Trump of invading Greenland is lower. I want to say, at least as he said it in Davos, he's not going to use military force, but you never know how he's going to change his opinion in the upcoming days. But it's all over again: terrorists. We don't really have also, of course, Russia and Ukraine, which is like media-wise a little bit in the background to my feeling at the moment, but there's no sign of peace like anywhere to be seen as well. And so we have this unsure geopolitical thing. Also Canada, after the quite harsh but real words from the prime minister at Davos, which was a trend, in my opinion, that we saw also from many European leaders, that they are more confronting the US right now and calling out Trump to being bully. And of course, Trump like throwing around with tariffs here, tariffs there again, 200% on French wine. Canada, because they said something about tariffs again. So it's a crazy world. And of course, what we see here in gold, to an extent, of course, even more in silver, is the like people not knowing where to flee, really. Bitcoin hasn't become like mainstream enough to be accepted as what it's intended to, a risk-off asset, to kind of save your money from currency devaluation or from a everything is devaluating kind of scenario. So there is really only gold left at the moment, and that's symptomatic. However, I believe, and I'm repeating myself from last week, is like, for me, it's like how much more can come now. The next step would need to be some kind of war, to keep this momentum up, in my opinion. It sounds a bit cynical, of course, and we all don't hope for war. So I'm going to repeat myself. I think we are super, super prone slowly for a pullback in gold. Whether this is going to be here or whether we're going to overextend to 5.3 or 5.5 or something, nobody knows. That's the definition of a bubble, of course, that you never know when it's going to burst. Just because it's bursting doesn't also mean gold is going to crash down to 2,500 or 2,000 or 1,000 again. But like a healthy setback of maybe 10, 20, 30%, something like this, to get us back at least into, where we have right now the standard deviation, the zero standard deviation, so to say. Look how far we deviated from this. We are talking about a price of like 4,700 right now, if you want to go all the way back. I'm, of course, not going to bet on this. I'm not going to short gold. I think that's suicidal in a phase like this. And but I would be more on the contrary if we see these pullbacks to then kind of decide, I want to build a position again. How do you see that?
Yeah, so we've also had some of the Cuba stuff going on as
right,
well.
I've totally forgot about that.
So, a lot more of all that geopolitics stuff going on. And then, I do agree. I'm still sticking by my 5,500 sort of area for gold for the year. I think this is getting a bit stretched, even with everything going on. Like this is wild.
It's
it
wild.
Really is. And I think the other push as well on top of it that's fueling it that hard is the like you're saying, like where do you flee to in terms of the protective asset? Because we've got this situation going on with bonds, got a bit of a capital war, fiat currency, that kind of thing. So I think that's the other portion really fueling it. And obviously today, it seems as though that's been a large portion of today's gains. Because we had, as through Friday, a bunch of the dips on dollar yen, right?
Yeah.
And it looks as though that hasn't been intervention just yet, right? It sort of ended up being, it was spurred from rate checking from central banks. Yeah. So,
which is ironic, no? Like rate checking, what does that actually mean, guys? Rate checking is nothing else than, for example, the Federal Reserve calling some of their market makers to kind of test the waters, like, how's the liquidity currently? What are your spreads? How much volume could we offset on you? And something like this, just that spreads like wildfire, of course, throughout the institutional community, at least. Like, oh, well, the Fed or the Treasury called me, and in this case, of course, the Fed, and maybe the Bank of Japan also called, testing the waters. I think they have something planned. And just this alone led to like a 3% strengthening of the yen versus, well, not only the US dollar, obviously, also others out there. Plus, of course, I think it was Friday, the Japanese rate decision, where one of the board members would have liked to see a rate hike actually to 1% from 0.75%. But you can see like how fragile this is. So they don't actually need to intervene already, the central banks. It's enough that they pick up the phone and make a couple of calls. So now imagine what so they achieved probably already, at least partially, what they wanted to achieve should they intervene. This is why seasoned forex traders always say never play against a central bank. You're going to lose, with some very very rare exceptions that we've seen in the past. For example, pound sterling and what was his name again?
George Soros.
Yeah, thank you, George Soros, of course. Sorry, I didn't want to interrupt you.
No, it's all right. So with all of that, this basically the thing to remember is that, yes, they have not yet fully intervened. And it looks as though, as well, the other portion to it is that it's not only going to be just a Bank of Japan intervention, it's going to be a cross-channel thing with the Fed as well, so with the US. So hence you get the double whammy. That also has that further contagion into US bond markets in terms of them pumping out more money to do that, essentially devalues the US dollar. And then that has ripple effects across the board, right? So that's what we've seen. And ideally, if they can start to put those pressures on, it does start to get some of their work done. But I think with where things are, it will come to a point where they do have to follow through.
Probably.
So I think the market is too willing to call the bluff and just turn the currency back up again, right? And the better they do that, that they can control the yen, means the Bank of Japan doesn't have to raise rates so aggressively. If they can't control the yen, then they'll be forced to do that, and then that's what causes just havoc. So right now, they're hoping that they can get away with this. It's always, currency intervention is very delicate, has to be very, very well executed for it to actually work. But I wouldn't be surprised if we are eventually going down to close that gap, finally. So very, very much on the lean of selling dollar near term. I think there will be points where the dollar yen selling does sort of snap back, and we do get the 150 point runs higher as well. So just be careful with that. If you're trying to continually short on the way down, you will get those big runs higher. Another thing I did see was that part with it going into the new year, everyone has swapped long dollar. So this has made it extra sensitive. So I think it was minus 2 billion net short prior to the start of the year. And now we're, I think, plus 7 billion, 9 billion net long or something. Oh, okay, sorry, inverse. We're net short 9 billion, now net long 2.7, right? That basically means that the dollar is going to have more propensity to fall because everyone basically is stacked up in longs and reverse the shorts. So those shorts start to get squeezed out. So quite interesting because it's across the board against every currency. We've seen Aussie dollar just kicking right up. We've basically hit my Q1 target now. I think like 20 points shy or something, or tapped into it earlier today. And then there's also dollar franc, which is interesting.
That's very interesting, actually.
Yeah, because you got record bets basically on dollar franc rising, and we're still on the floor, really. So that calls into question if the Swiss have to come in more heavy-handed with intervention along here. You can see that base forming. It seems as though they have done pockets of things, but if we crack through that, they'd have to potentially swoop in.
Kind of reminds me of a scenario we saw in 2015, early 2015, when we had this floor against the euro at 120, and they basically had to give it up because they had blown up their balance sheet like crazy, and we dropped within a matter of seconds because all liquidity on the bid side was just gone from 120 to, I think, down to 0.88,
like or something.
or something, 85 or something, which was crazy. Which back then, when I was working still in the family office, like cost one of the main clients we had around 30 million euros. Just these couple of seconds, and it was crazy. And who says that cannot happen again? But I think they're going to be more careful. The Swiss National Bank central bank about stuff like this. But it's a potential nuclear bomb that could hide in balance sheets. I haven't looked at the balance sheets honestly for quite some time. Might be interesting to look into that. By the way, and let me just very quickly. Because on the meta, where is my screen? For dollar yen, we have quite an interesting expiry New York cut today when it comes to options. So we have quite a large notion with 15.3 billion US dollars in notional that were going to expire later today at 4 p.m. New York time. And this is also where our max pain for US dollar versus yen is today. So that could be a potential attractor, dragging us towards 153 from the 153.7. I think we're trading at the moment until these notional options are released, because of course, like, this is where the max pain is. This is where the buyers of the options are going to lose the most money. So that is on the radar until 4 p.m. New York time today. No, sorry, I'm lying. 10:30, I think it is. The option expiry, New York cut. I have to be lying now. And after that, if I look at the hourly chart, because obviously we formed a gap again, I also could see that we are first, before we continue to the downside, going to see something like, a gap close here, because it so nicely also sits on the -1 extended deviation. So we're talking here about potentially something around 155 plus here, to then after this continue. But I think a move like this would flush out a lot of retail traders, sadly, again, that are sitting on dollar shorts right now.
Yeah, I agree. I'm looking for a bit of a return higher. Same with this. So euro dollar spot. So I've come to, like we were talking at the start of the year, I think I'm going to stay pretty much firm on my sort of Q3-ish from last year expectations to this year, because I think over this past week, I think we've rolled on towards it nicely. So, but yeah, so basically with the euro dollar, we've got a bunch of options barriers right now capping things. I think we'll have to have a bit of a pullback and then take another run. So same deal with dollar yen, that return higher before taking another leg. And I don't know, it's interesting. I'm thinking about just keeping some small, well-sized shorts just in dollar yen, just constantly. So I did short last Friday, but I didn't hold it. That was after we had that drop.
Nice.
We were talking about it on the Discord call on Friday, and then ended up taking the trade through there because it's almost the same as classic NFP pattern. You get the dip, the rally up to there, back, and then you find a top and then continue off in the original direction, right? So we're getting capped nicely by the underside of that higher trading range there, by the tops there too. So I did not hold it into the weekend or over the weekend though, however.
But
it's so hard right now, right?
In hindsight, it's good, but I mean, the scenario totally could have flipped on the weekend again. So, and then we would have had a gap opening to the upside instead, because somebody, for example, well, not from the Fed. I mean, those guys are not working on the weekend anyway. But the situation is always so fragile, just somebody can say so. So I think I would have done the same. Like close the position. Of course, you always get like regrets like thinking like, oh, if I would have held onto this would have been my trade of a year so far, probably with an insane R. But that's always the thing, if you first of all,
I mean, it was still a really good pickup. I mean, this is what, like 100 and what is that, 160 pips? So it's not small to begin
within
with,
a couple of hours.
yeah, right. So so that's still great. But and then also today's it's Australia Day here. So I wasn't sure if I'd be around for Monday. It always depends what's going on. It's always a big holiday weekend. So shout out to all you guys from Australia. Happy Australia Day.
Always depends.
I don't know how many of you guys might be in here. I saw Henry before, but I'm sure a lot.
He was.
I'm sure everyone else is probably a bit plastered.
So what you are saying is it always depends on your blood alcohol level on Monday morning.
Yeah, and it ended up doing stuff on Saturday instead. So
okay, so you had one day to recover. Nice.
Yeah.
Yeah, but crazy what we're seeing here right now. I mean, it's like for me, it's like I'm really wondering, like, are we finally going to see the carry trade unraveling, or because we have seen situations like this many times in yen. Let me quickly switch to the daily. So these crazy candles, like the last one we kind of had here, we had a situation like this here, where you said where we still need to close the gap, right, from early October last year. But it seems like liquidity always finds a way back into the US dollar, into the carry trade in this case. As I said, maybe it's due to lack of alternatives. And I wonder when the breaking point is going to come there, because we are slowly but surely, day by day, almost seeing the gap between at least the lower end majorities, like the 2-year dollar treasuries and 2-year yen treasuries, closing more and more. So if I look, for example, at the we have a new high again in the 2-year. We're trading at 1.26% now, whereas the US yields are trending lower. They're like struggling a little bit because right now markets are pricing in, I think, around 2 rate cuts for this year. But I mean, probably. What is the scenario here? Are people like banking on Trump saying stupid stuff? So yields explode to the upside because
it's. Yeah, I mean, I think it's purely because of that. It's the rotation. So Japan's the biggest holder of treasuries, right? So if you get that rotation, and the Bank of Japan kind of goes to their other entities saying like, look, we can't just keep doing this all ourselves. We need the private sector to chip in. Some of that capital, comes back to help suppress yields, so they don't have to just raise rates incredibly. Because if they have to do that, then everyone else's costs are going to rise regardless. So, it's better to do that and keep the other things stable, whatever, right? So, I don't know if that's sort of part of it. There was a weird, and there's been questions as well. I only read this yesterday, but I think that Bloomberg put out an article on like the 7th of Jan. There was record futures trade for Fed funds futures, which is like $1 trillion notional value. So there was questions as to whether that was like outright or an unwinding of prior bets, basically betting on no cut. But either way, it signals I don't know. It's weird because any change in it would be $8 million per basis point.
Yeah, for an outright, that's a gigantic position. Also, $1 trillion.
Yeah, it's the largest. I think it's 2,000 contracts.
Crazy.
The prior largest was last September, which was 783 for one outright. Which So the notional value of it is $1 trillion, which is bonkers. Yeah.
Maybe a little bit of explanation for those of you who don't know what an outright is. So what we usually do here when you trade your Fiverr account, you trade the so-called spot market for Forex. Means like you do a trade now and then settlement is always plus 2 or 3 days to the future. This is why you have those overnight financing stuff, like on Wednesdays, for example, for the weekend as well. Settlement means in reality, if that would be settled, this is when you would see the movements on your account on if you're trading dollar yen on your dollar account and your yen account. When you do an outright, you already settle a price to on a certain date in the future, which already incorporates all the interest rate and swaps. And not interest rate and swaps, these are included into the swaps. So everything there's kind of like an interest rate as a markup or markdown is already included. And you usually do that. I do that, for example, when I sell options, I do my so-called delta hedge. So the percentage risk, you could call it, as an outright hedge onto the settlement date of the option already, or the expiry date of the option. So I don't have to pay swaps, for example, every night.
Yeah, exactly. But yeah, so yeah, I mean, it's wild. It's going to be really weird because it's going to depend entirely how the yen situation itself plays out. Depending on that, changes the whole bond picture, which then snaps things back the other way. It's going to, I don't know, you have to hope it's going to be, the plane will be landed nice and calmly, which is obviously difficult when you have the US side of things going a bit weird right now.
Yeah, but this is like one grand example, in my opinion, why you need an independent central bank. No, I really wonder how if this is not resolved, which probably is not going to be 100% resolved until May. I wonder how that picture is going to change when we have a new head of a Fed, whoever is going to be. But this person is going to be very much more pro-Trump and very much more towards giving up the independence of the Fed. So I don't want to know what happens if suddenly smart people, from the US administration, are starting to intervene in potential currency interventions.
Yeah, because I mean, the whole thing can become a negative spiral very quickly, and self-fulfilling negative spiral. So, it's tough either way. And this goes back to I don't think they can allow that to happen. I think it's kind of one of those, where
this would be the point, in my opinion, where institutional would really lose trust into the US dollar as the world's currency. I think that would be a potential inflection point for that.
Yeah, and which in that case, scrap the gold to 5,500 thing, you're going straight to 7K pretty quick. But I don't think they'll allow that to happen. I think they're very well aware of the situation. They have been for a while. They were talking about currency stuff all the way back to trade talks and stuff like that, right? It's been an issue ongoing for ages. So, and obviously Japan is right in that position between US and America. So I think they're very well aware. I'm sure they've got all sorts of things lined up in the background to play it through until the timing thing. So yeah, I think it will be fairly orderly, mainly because it has to be. And finally, when things have to go right, they do actually tend to, because they're willing to throw the kitchen sink at it typically. Yeah. So especially these days, right? Because we've had the prior times where they didn't do that, and then you get the problem, and you have to play cleanup anyway, so it comes out of the same thing. So yeah. Henry's saying you work today though. Ooh, wow. That'll be some juicy dollars. Yeah, get holiday rates. So, and you don't drink. Okay, fair enough.
That is good. That is something good. Yeah.
Thank you, Akram. And dude, it's been blistering hot today.
Really?
That's actually why I had this up before.
Oh my god,
this is Australia.
I'm freezing my butt off here. Really, I have both of my heaters on in my office. Actually, outside is not that cold, but it's windy today, like -2 degrees, snowing, and I decided to even wear, a jacket today because I'm freezing really my butt off otherwise. But look at Australia; it's boiling down there, really.
Yeah, and it's extremely humid. It's still like 28, 29. I think Wollongabba here for me is 29.5 degrees. But it's like 8 p.m. and the humidity is still ridiculous. So yeah, it's the humidity as well that kills you. But it's been a warm one, that's for sure. So but But yeah, gold, I do think, like you were saying earlier, I think we are starting to get a bit stretched near term. I've heard a lot of chatter of a drop back towards 4,800, 4,700, and then similarly on silver, a move back towards about 90 to 86. That's sort of the institutional chatter I've heard about / stuff through Reuters and Bloomberg and all that. So I don't know. There seems to be more and more eyes on it.
But the institutions are having their problems as well there at the moment. I'm very sure.
Yeah.
Ironically,
there are heaps of them.
The people who, like one guy I know who was like at Credit Suisse, who is managing the gold book. So he's like doing all the options pricing, doing the hedges for the bank, and he doesn't pick up his phone anymore at the moment when I call, which is a sign that he's just, frustrated and busy. And here, this is actually a good question. What do you guys think about the huge spread on gold? Do you think it will drop soon? If you see this widening of spread, that is not usually the broker's fault. That is like a symptom of liquidity getting thin, and market makers are less willing to take this position because of the volatility. So you have to pay by the spread to convince them to give you the liquidity to get into the position. It's a sign that there's something probably breaking sooner or later in the market. Not always,
stress.
sometimes. It's a stress sign, absolutely correct. For me, usually it's a sign that that this is a market where I, for the foreseeable future at least, I'm talking about a couple of hours or days, want to stay out of a market until I see the spread becoming tighter again. I've seen that in gold before. I still remember me trying to hedge my gold options positions for a client in 2014 that was at 2 a.m. at night and absolutely not being able to buy a single ounce of gold on the market, on the spot markets. And also in euro dollar, that sometimes happens. I remember times when I called banks and they gave me like a spread of 100 pips just because, to say, we're not interested in taking any more risk into our book. So go and F yourself, please, at least for the moment. You want to be careful. This is going to normalize sooner or later. Usually, in a situation like this, at least from my experience, you're going to have one blow of top in this case of gold, and then things are coming down very quickly. But like I said at the beginning, I don't know when this is going to be. Is this going to be now at around $5,100? Is it going to be 5,500, 6,000? Things can escalate very quickly. And I know it's always tempting to take position in a market like this and try to fade the markets. But it's also very, very, very dangerous. These are, for retail traders, normally the situations where we see accounts blowing up very quickly from just one or two positions.
Yeah, I definitely think we're getting quite close. But
I'm going to quickly get another shot of coffee for me.
Yeah, sure. That's right. Yeah, I wouldn't be surprised, like Dirk was saying, that I think we'll get a bit of at least a pause kind of pullback. I mean, when you look at the scale of this thing, it's not much, not much of a pullback if we just even come back down through to like 4,800, right? We're sort of just coming back into the basically the standard div channels, right? So momentum normalizing, coming back into the median, and then we'll probably continue on. So it might be another run, almost like we got the double top. What was that? That was over here, actually, wasn't it? Yeah. So zoomed out now. That's crazy. And then, get a deeper, more extensive pullback. I think from here, you'll probably be looking about 4,800, just a small pullback. For now, about 5% or so. And then another run higher, and then some kind of deeper pullback. Silver, on the other hand, this 110 plus area was where I was looking at as a potential fade point for silver. And especially with how aggressively this has run out, I don't mind this as a potential idea. Now, obviously, the thing to do is going to be going down to lower time frames, finding some kind of structure that gives you confidence in the market actually rolling over. Confer with the gold market as well to see how structure is playing out there. and then potentially moves in the dollar. So if we get a bit of this sort of risk off elements that we've got, it's kind of a weird, we've got portions of risk on, risk off. It's like caution. And we get, say, like we were talking about dollar yen, the pullback up, close this gap, and then go for another leg lower, something like that, right? If we get that, I wouldn't be surprised to see silver also pulling back. Same with gold near term. Once those moves are played out, then we might see another leg. So similar deal with Aussie dollars being on a storm as well. So we're just about at my Q1 target already for the year that I set back, I don't know, it was November or something last year. We're right on track for that very early. I thought it would have been closer to mid to end Feb, sort of third week of Feb. But we've gotten there the third week of Jan right now. So this has been on absolute tear, absolute storm. You've got gaps across across all the majors right now, obviously. So I will be looking for some kind of pause area through here, come back, close that gap near term, and then maybe a slightly deeper retracement into some of the sort of base levels there. Similar deal on Euro also. We basically closed the gap on Euro earlier today. Euro is not storming up quite as hard. We hit the 119 barriers like we were talking about before. So that's probably what I'm looking at. Other stuff we haven't gone over is NASDAQ, S&P, that kind of thing. But we will take a look at that shortly. So yeah, similar deal for the Dixie. Basically how that would play out. I probably need to clear all this scrap from last year as well. There's so much on here. Let's go ahead and delete it all. There we go. It's gone. We're fresh. All right. So I'd be looking for basically a return higher, testing the underside of this, the base through here that we traded down to before the sort of short-term relief rally that we had early Jan. Rally up to there and then continue the move down. So yeah, starting to see that kind of structure across the board overall. Whitfog saying, I don't see how the US can recover the value of the Dixie in the next few years. I think we're more likely to head to 80 to 90. The US has proven to be unreliable and people slowly unwinding into the US. Yeah, so what we had talked about a lot last year was ultimately, if we go out to, I think we need like the weekly. One of the main things we were talking about last year, and we had the back and forth after the tariffs, right? You know, dollar write-off. That was when we had the euro rallying when Trump first came in from 104 up into the 115 plus kind of area. And basically we broke down below this higher trading cluster. And then we've basically since then gone back and forth and tested the underside a number of times, haven't fully broken down. The full breakdown is basically being thwarted by dollar yen continuing to come up. Every time we've tried to push through like 140, we had a few attempts, but Trump would come out and say something. We'd have some kind of piece of data that would just, you know, shift things enough that we'd move back up. Now, it looks as though we are firmly starting to get that drive lower. So just like you're saying, down into that 90 kind of area. So that's another 700, or basically from 90 to 97 to 90 on the Dixie, which roughly translates to like 700 points higher on other currencies. So you'd be looking 124 or so. Things like the euro, dollar yen, basically back down to somewhere through here at 146 kind of areas, kind of what I'm looking at for now. And then see how price holds up through there. If we get, you know, the sort of downside pressure on the yen doesn't stick and we start coming up, then you'll probably get some kind of intervention and then they'll try to whack it right down through. But hopefully the idea would be we'd flounder around there and it'll naturally just break through itself. That's what they'll be looking for. So yeah, I definitely agree. I think dollar downside is looking pretty all right.
And I think like even 144 for dollar yen, that would be already quite something, and we would have a lot of less discussions and about intervention already if that occurs naturally. I think that's going to put a lot of pressure off Japan.
Definitely. And then obviously it becomes that back and forth. You push one side, it goes the other way. Now you got to push it back that way type thing. Because once we get there, we will have that all having calmed down. US settles, hence people start buying it again because now that's out of the picture. To which then, that's probably when they heavily consider, firm intervention to try and knock us down through this kind of structure that we had. Like firmly stick below that sort of mid-range, right? Be trading in here and ultimately break down from there. That would be the idea, I think. When we were saying the thing with silver, from what I saw, many people who stacked silver to sell it. Now the dealers won't buy from them in fair market and lowballing 20 to 30%. Yeah, there's heaps of institutional players as well that have been shorting silver for some time. This was part of when we had, I go down to 4 hours should be right. So when we had this blow off top, sort of through here, there was a number. That's when we had the CME increasing margin costs for silver, and there was a number of banks and hedge funds and stuff that were very, very underwater on their silver positions, trying to short. So we had that blowout through there for it to crash down. Since then, what is this? Like, this was looking ridiculous through here. It now looks very tame compared to, since the start of this year, right? It's this is getting.
I mean, also apart from everything crazy we are right now seeing, especially in silver, what is it, like a 200% price increase now compared to January 2025, which is insane for metal, for precious metal at least. And if you want to argue like this, it's kind of like from a more fundamental perspective, at least you could argue. Yeah, I know it sounds crazy. You could argue like, oh, this in parts maybe is because, all those new supercomputer AI server data structures need a lot of silver, especially when it comes to AI supercomputer chips. They use a lot of silver in production. So where is the demand there? I only have numbers from 2024, sadly, when it comes to the demand, which was like 460.5 trillion cannot be million, whatever, tons in demand. That is 2025. So that probably has like at least doubled last year, I would assume, with things really progressing faster in that direction. So you could argue that. The same, of course, for gold. Silver is, to my opinion, not an opinion, in my knowledge, like an even better conductor than copper, for example, is. That's why it's used in especially AI chips so much. But that, of course, doesn't justify prices like this. No, normally maybe we would say something like, well, okay, instead of 30, we're now trading at 35 or $40 or something like this. So this is all speculation, really, we are seeing there, and it's not going to end well for a lot of people. You mentioned it already. A lot of hedge funds, or some hedge funds, institutions got in trouble. There's more trouble on the horizon. I don't know if we've seen a margin increase lately again. Probably if we would have seen something like this, we would have had at least one large red candle to the downside again. But I'll double down. As tempting as it is, do not trade markets like this. It's okay, if you want to do it for a little bit of fun, but I would not do it on my evaluation accounts. I would especially not do it on funded accounts, because even with small positions, and for the case that you have a stop loss in there, doesn't mean that you're executed directly at your stop loss. There can still be a lot of slippage between where your stop loss sits and what your actual execution is. Or you are right, but you're getting stopped out anyway, because like we learned earlier, we sometimes have spread widening now in metals, because the market is vulnerable, or how did you put it? It's broken basically at the moment when it comes to support, demand, or liquidity. So be extremely, extremely careful, please, with that. I really would not like to see anybody here being stopped out because of slippage in a precious metal.
Yeah, be very careful with your sizing, and definitely careful holding things over the weekend.
Oh my God, yeah.
If you saw this on Friday and you're like, okay, we got this. I mean, you definitely shouldn't be shorting that when you get like a full candle close at the peak before a weekend, right?
That's a bearish sign. It's absolutely a bearish sign.
Because you'll come back on Monday and you're like, oh no, damn.
But to be fair, I mean, the first prices on Monday were not, that much of a gap to the upside.
No. Only, I mean, it's still 100 and 120 points, right? Like $1.20. But the thing is, now that is insane, right? That is like nothing, is what I mean.
It is, yeah.
But back when we were at start of Jan last year or whatever, and if you went up like $1.20, you'd be like, oh, that's a big move.
Yeah.
So yeah, it's yeah, as we've said a number of times, be careful. I do feel like we are hitting some kind of near-term wall, though.
Yeah.
110 was sort of where I was looking at.
I think that too, but I've been saying this since $70, so I better shut up my stupid mouth when it comes to silver at the moment.
Well, I may consider a short somewhere through today. We'll see how it goes. So if I do take it, I'll update you guys tomorrow and over the next little bit. So we'll see.
That either is, yeah. I mean, if it succeeds, it potentially can be the trade of a year for you.
Yeah. Well, the question is like, where would I jump out? How aggressive would I hold this?
Or it's one of those metal trades where you are correct with your positioning, but you get stopped out because of a stupid wick to the upside.
Yeah. So yeah, it's one of those things. So I just trade it into like local support, something like like this, lower time frame type thing. Now I've made the stop too short. I can't pull it back up. There we go. No. Oh, there we go. Just a small kind of trade, something like that, or do you actually go for like the full pelt to like where we opened today and try and get the big drop, right? But then you're going to have to widen the stop anyway. So that's the thing. You might as well just play the smaller bits and pieces.
And you're going to die the death of paying swaps, especially if you want to do that on a Wednesday.
Yeah. But yeah.
This is kind of interesting here. Poly-market government shutdown prediction jumped to 79%. You mean government shutdown, probably like the shutdown we had just in Q3 and Q4 last year, I suppose. Well, I think that's a pretty safe prediction that this is going to happen in the USA again, as it has in the past 10 years, every year.
Yeah, we're coming up, I think it's like 6 days away. They have to decide, like end of the week or something.
Yeah.
I think Trump did pass a temporary thing early this morning, like 10 hours ago.
Yeah. Okay.
Temporary funding bill. I saw that somewhere. Let me see if I can find it.
There's an interesting. Let me quickly go over. It's just something I discovered that there are macro maps also on trading.
The other side thing I was going to say as well is potentially, as far as poly market, there's some, I don't know, there's some guy who's bet on a bunch of the various attacks through sort of the Middle East the past while, and he's made a ridiculous
like a ton of money, where people think, righteously so, in my opinion, that he must be some insider.
And it's been going around for a while that another attack on Iran from Israel or whatever.
Okay. That's pretty realistic, in my opinion.
Which the US also put out a thing today from the saying that they think there's signs that that's going to happen. So
What?
another one of those risk-off type things to be careful of, because hence, like we're talking about potentially shorting gold or silver here. If we got something like that kicking off over the next little bit, say goodbye to that. We're taking another leg higher. So yeah.
Look at this here. Australia is one of the healthiest countries in the world when it comes to debt to GDP ratio.
Yes. Yeah. We always have quite a low debt to GDP. It's always a focus of the government keeping it.
Well, Germany has also come down. I remember times when we were also above 100%, now 62, whereas our US sitting at 124%. That's insane, really. China, 88%. So, yeah, I just discovered that, I think like yesterday when I was playing around with TradingView a little bit and thought it's quite interesting.
Yeah, it's good. And plus you can check all, inflation, that kind of thing as well. Yeah, it's really good. But yeah, Australia's always kept it down pretty low because our population's pretty heavily indebted, right? Because of housing. So therefore the government kind of has to stay pretty low key.
That's the same in the USA, no? Like same in the USA, same by the way in Germany also. But
I think the US is like 100. They're basically as far as the population is like 100% debt to household equity.
How much is that? You know how much that is in Australia?
It's like 185.
Wow.
Debt to So we're up there with, I think Canada is like 175, and then I think New Zealand's like 190, Switzerland's like 160 or something. So we're like second in the world. And then there's like Hong Kong, which is, I don't know, one.
Yeah, I mean, Hong Kong is like
it's like 140 or something, but
the place where you pay like $5,000 a week for an apartment with the size of a shoebox.
yeah.
Same in Singapore, by the way. It's also I was going to say, I was like, my God, like the apartment I used to rent has like doubled in price within the last 8 years. And it was already very expensive back then. So
yeah, exactly. I was going to say Singapore's the same. I did see. I'm trying to find. So it was 11 hours ago. Trump signed a partial funding bill into law.
Okay.
So I believe there is more time on the government shutdown, at least for now.
I mean, that's again, the last thing Aussie wants right now. Let's be honest, right?
Yeah. I don't think you could play that card again right now, not with everything going on.
No chance.
That would be, no good. Apart from that, I don't think there was any other major pieces. Bank of Japan money market data suggests Japan did not intervene on Friday.
No, I don't think they did. So, I really think
it's really just from the banks unloading after getting
that
the
plus
rate check.
Plus the rate check, exactly. It's just kind of a psychological game that was played there.
Yeah. It's it did work. To be fair, we're quite a ways off 160 now. So, Nico was asking just before, how do I use the standard deviation channels? So, the standard deviation channel, basically what we're looking at here. Let me bring up the settings. So we've got +1, +2, and -1 and -2, and the length is over the past 120 bars. Right now, basically what that does is it takes the past 120 bars and gives you the middle center line through here, and then one standard deviation above, 2 standard deviations above, and then same on the downside, right? So -1 and -2. Now, if you're familiar with just like a traditional bell curve, that basically encapsulates 95 point whatever % of all price action, right? So generally, anytime you're starting to press those bands and go outside, price will tend to move back into the center point, into the median sort of average price, right? So what you can do is trade the price action from end to end. And then this will also shift and scale with the ATR as it continues along each bar, right? So keep updating, expand or contract. And it's a good way as well, also just visually to see, we're clearly in an uptrend, right? But now you've had this sideways consolidation, and you might go, okay, is this like the end of it? Are we going to come out, or is this still within means considering the current momentum and average trading range, right? So from here, you could then line up something. If you still see, say we go to a higher time frame, from there, you can see on the 4 hour, we've been consolidating for some time, sort of just trading sideways over the past month, 2 months really, when you keep going all the way back. We now seem to be breaking ahead of that. So the 4 hour and such will be slightly lagged, going back into Christmas and such. But then you go down to the 1 hour, and so we've broken up through here, and you then find where like the midpoint through here or the +1 standard deviation pull back into there. Ideally, you'd want to probably close that gap, buy towards off the gap, which would be down through there. And you might place the stop either at a relative shoulder level to the left or below the -1 standard div in this instance. Go down to the 15. If you're trading on a shorter time frame on the 15-minute, as we press down into here, by that gap, you might look to buy. Right, so it's pretty much just playing it end to end. It's a bit of a mean reversion type approach. I feel like I kind of communicated or explained that a bit poorly. You can tell me, Dirk. I feel like, but
no, it's absolutely right what you're saying. It's like, especially when it comes to. Let me switch very quickly to my chart. When it comes to the bell curve thing that you have, so that kind of looks like this.
Give me 1 sec to
sure.
I just got to jump up.
Excuse my crude drawings here, guys, but you have, like LJ said, you have in this bracket like 95% of prices going on. So once we go to like prices on that deviate from the standard prices to the upside, which would be like kind of this area here. So starting maybe here until like we're talking really about like the 5 percentile, for example. Likewise to the downside, there's a good chance that price eventually will snap back into this 95% percentile, which is usually around the 0x, so to call standard deviation, so the median price of the length of a standard deviation. However, you have to be careful because markets do not tend to really trade by the logics of standard deviations. Otherwise, it would be very, very easy to predict where markets are going. So you want to align that more with other stuff as well. That can be moving averages, weekly highs, weekly lows, other indicators, for example, where you basically get, let me switch back to the, actually, let me switch maybe to Bitcoin, because I think there's something that explains that very well, which I, like for some of my clients, did this morning. So what we had, for example, on Bitcoin is, first of all, on the daily, a downtrend. And then we saw price snapping to the upper 2x standard deviation. It really deflected exactly at that one. And this one aligned with what is called, ironically, the bull market support bands, which turn into bear market support bands if we have a downtrend, obviously. So the naturally, since we are in a downtrend now, we were deflected there as a confluent zone of resistance, standard deviation 2x to the upside, plus bull market support bands. So the target for this can then be either, if you like very short term, something like the 1x deviation, or for me, the target is round about this zone at the moment that would return to the median price, which is depending, of course, at what time we reach this one. If we were to do it today, we would talk about like 82,000. Of course, this usually doesn't play out within just one day. So price could do first something like this again, go up again, and then eventually break down. But it gives you like a good framework, especially when it comes to where are, first of all, zones of potential interest to enter, either with a trend or if you want, you can, of course, also be a contrarian here. So in the case of Bitcoin, that would mean you're looking for when price touches the minus 2x standard deviation channel. However, I'm always a friend of going with a trend, honestly speaking. But it gives you kind of a framework to determine where are good zones of entry, where are good zones on, where are especially also good zones of profit targets. So if we play that through, let's say you really identified this as a potential short target, and your goal is maybe somewhere around the standard deviation 0. So the median price, you probably would have picked something like this, like shortly above the bear market support bands, I'm going to call them, target down here, which gives you a risk reward trade of 2.31, which is a very, very good risk to reward. This is, I mean, for me, it's also like I'm used to using standard deviations, but not as a visual tool on TradingView. That's why I'm so thankful that LJ introduced this indicator to me, because it's just so visually appealing and makes decision making, where do I put my stops, where's a potential target, which always is the difficult part, in my opinion. Like, how far can that trade go? Is it worthwhile trading it if I put my stop loss at a place where it also makes sense, because we would see a break of structure maybe at that target. And once you see something like 1.5, 2, 3, something like this in risk reward ratio, depending also on the time frame, of course, you're trading this, then it's easier to pull the trigger. It's also easier, in my opinion, to stick to your guns and not starting doubting yourself and starting playing like, oh, I'm going to adjust my stop loss now very quickly to break even, or I'm prematurely taking my profits off the table, which is going to hurt you long term. Then there are all kinds of variations you can play around with this. I know, LJ, you, for example, you tend to have like 3 possible take profits also sometimes. So I don't know, maybe taking a 1/3 of your position, the chips off the table. There are a lot of variations you can play around with this. What is important here is it's not a single indicator that you can use to decide I'm going to enter now, I'm going to exit now. You should use it in confluence. Best in confluence with other indicators, even better if it's in confluence with the overall narrative we are seeing. Talking about dollar yen, of course, the preferred trade would be right now gap closing and then shorting that, for example. And if this aligns with the standard deviation channels, well, then you got a nice trade on your hand.
Yeah, exactly. So it can be really good as well. Like, say if you're looking at gold last week and you're kind of going, okay, where could this keep running to? You can see today, we've tapped in nicely into the edge of the bands, right? And so if you were long and you're considering, okay, do I keep holding to 5150, 5200, or is it reasonably smart for me to take profit here or take a portion, wait for price to sort of consolidate, move back slightly, and then take another leg higher, right? So very good for high momentum assets as well. And yeah, the important thing to remember about basically this is standard, bell curve. So the idea is that these standard deviations will encapsulate the majority of price, and then once you really get out to that third standard div, that should be basically all of price, which is when you get the blowout portions, like we saw, with gold now starting to press outside on 4 hour, you'll tend to move back. The important thing to remember with the bell curve is that in finance, this is basically just encapsulating the information, the trade data that is there and present. It does not qualify things that are not present in the data in the future. So for instance, in stocks, you get what's known as a fat tail, which also typically tends to be a adverse downside movement, say a huge shock, financial crash, crisis, COVID, whatever it is. And then that will tend to make this curve basically stretch out further on the downside. So then that means you're diametrically opposed to a larger downside move than equally on the upside. So that's the thing to remember with that. However, typically those things only show up if you're trading over a longer time frame. If you're kind of getting in and out, more real time, intraday, that kind of thing, it's typically unlikely that you're going to get slapped with that too hard. Depending on the time frame, if you're on like a 5 or 15 minute, then Trump could come out and tweet or something, and then we crash right through it. That would be an instance where yes, that will happen. But then that's why you go up to the high time frames, where you should still see price encapsulated in the expected area overall. So any given day's happenings typically shouldn't blow things completely out of the water. So that's why it's quite effective on that lower, more active trading time frame. Once you go into longer term stuff, stocks over months or years or whatever you got to do, a lot more in-depth, intensive modeling and that sort of thing for it to be reliable. So
yeah, ideally you also want to have the time frames kind of aligned, like trade on the 5 minute, for example, into the direction that you see on, for example, the hourly or 4 hourly. If you see a misalignment there, I think dollar yen is a good example right now for that, where we still have a misalignment of, if we look at 4 hour down to the 5 minutes, where it's already breaking down. Exactly. So ideally you want to see that aligned, of course. You don't want to, it could be a sign of like a break of market structure, which obviously has to start on the lower time frames. But as traders, we always want to kind of go with the most likely scenario. And we don't want to trade the odd scenario. I know those are always the scenarios that tend to be the most profitable, but that is always kind of like long-term, both crash gurus predicting the stock market is going down by 95%. And they are wrong 9 times in a row. Maybe they are one time half right, but the money you lost on those trades, you cannot make up again then.
Yeah.
So
yeah, this is an example of an adverse sort of event like we've had the past couple of days, which is going to blow it out, right? But hence, like we were talking about, a likely move up here to sort of close this gap, find some kind of level through here, and then come back off. Once you then drill down to those lower time frames, you can see where some of those pieces stack up, and then find some, like Dirk was saying, like another what's the word, a confluence with another indicator. So whether that's a moving average, prior head level, support, resistance, or whatever your favorite sort of market indication tool might be.
Highs and lows of prior days tend to work also quite well, in my opinion, or weekly highs, weekly lows, monthly highs, monthly lows, average price of the week, not so much for me at least. It's really like you have to find something that kind of appeals to your trading style, to your what you can interpret easily on a visual level. And everybody's different there. Like, I know a lot of people don't like moving average, for example. I like them very much. A lot of people like somehow, because human nature as a beginner trader is always like be contrarian. So a lot of people flock to momentum indicators like the RSI or slow stochastics and stuff like this, which is okay, but you want to make sure it's kind of aligned with the bigger picture. Question from Nexus SG, Dirk and LJ. Is there a strategy for gold forex pairs to pass 2 phases in less than a week, like starting 5K account? My honest answer to this, no. Because if there were a reliable strategy to do that in a short time frame like this, it would be out there, open information, so it would be arbitraged away already. Otherwise, we would have a scenario where everybody can get rich in a very short period of time. And as we are talking about efficient markets here, especially in gold and forex, edges tend to be arbitraged away, at least if they're public knowledge. This is why all those trading strategies on social media you see where somebody is proposing, oh, if we have an opening candle like this, do that. They're not working. Usually, it's a sales pitch more than a trading strategy. So I'm sorry to tell you this, to be the one that breaks the news. At least that's my opinion. Maybe LJ has a different opinion, but I doubt that, honestly speaking. Is that you have to go the hard way. First of all, you have to find something that works for you. Ideally, not ideally, I think nowadays it's mandatory that you backtest it. Is my edge real? And then you got to apply it to reality. And then you will very quickly probably find out that in order to keep your account surviving for a long time, and not just short time to maximize short term on potential payouts from a funding account, you have to have a solid risk management in place, which usually means that you're not going to make several 100% in performance every year and have like millions of payouts from a 5K account. As with everything in life, if you want to be successful, you probably have to do it the hard way. Learn, make mistakes. Don't make the same mistakes 2 or 3 times in a day. Learn in a row. Learn from your mistakes, adapt to them, kind of undergo like an evolution. I always like to say learning to trade is like learning a language. The more you practice, the probably better you will get over time. But also for that, there's no guarantee.
Indeed. So I would say that, obviously, I mean, I guess first of all, technically you can't do 2 phases in less than a week because it will be 6 minimum days regardless because of the minimum trading days. But regardless of that, so I mean, you can have like a really good week, like a blockbuster week, and smash it out. That can happen. That does happen. Every trader, you get either 1 or 2 days, or maybe a week or 2 weeks worth of those days each year. Quite common. There definitely would technically, theoretically, be strategies out there that could do that, but it's nothing you're going to find printed on the internet or that someone's just going to hand to you, because if someone has that, they're going to want to keep it under wraps to themselves for that exact reason, like Dirk was saying, so that it doesn't become common knowledge. Everyone else jumps on the same trade, and then it gets arbitraged out, and then the trade is no longer valid. That edge gets compressed basically to zero, or compressed to such a degree that the trading fees and costs don't make it viable, right? As far as someone handing that to you, you won't find it. Now, if you can learn all the various styles and in the market and trading and different ways people go about things and analyzing certain assets and all that kind of stuff, just trading in general, take all that, put it together yourself in your own formulated style and strategy, then you might be able to build that. Now, doing those kind of numbers consistently is not going to happen though. So again, that might be like you do that occasionally now and again, where you just have a really good week. You're really on top of the market sort of sentiment. You're really in the pocket, in the flow. You've caught the right side of everything. But I wouldn't rely on it. If that was something that you could just do and people did regularly all the time, you wouldn't have a functioning market. By definition, it would not be functioning, right? So, it's not going to happen consistently all the time. So I would stick to just building like a core, reliable sort of approach strategy, something you can measure, keep on top of very easily. You're not going to be swinging wildly, that kind of thing, and then just do it consistently over a good bit of time. That's what you need. It's just compounding. It's a thing that people have said to Warren Buffett. People are like, oh, why doesn't everyone just do what you do? They can just copy you. It's all out there. He's like, people don't want to do it. I like to get rich slow. No one wants to do that.
Yeah,
that's the best way overall.
Especially nowadays, our brains are so focusing on instant results. It's like I said it over and over again. There is a study that the average attention span of a human being is now below that of a goldfish, which has an attention span of 8 seconds. Whether that comes, from doom scrolling on Instagram and TikTok, or this is something natural, I don't know. I don't want to judge that. I can see it in myself, by the way, as well. So I'm not even pointing like fingers out there. But from this type of doom scrolling behavior and your brain being trained on, I want instant reward, I want things to instantly, I want to become instantly rich. When you like catch yourself at a time horizon of a year or even 3 months is already like unbearably long for you. That you know, like, oh, I'm not going to have a discipline of trading my strategy for 3 months. Really disciplined. You know, when there's a high likelihood that sooner or later you're going to do a mistake that's going to break your account. And we typically see that, ironically, at the stage where people go from evaluation to funded. And remember in the last stream, we had somebody mentioning that also, ever since I became funded, somehow I cannot trade real anymore. So there are psychological hurdles also, or maybe the expectation is, now I'm funded, now I want to really earn money with this because I put so much work into getting funded, which is something like 95% of the people also doesn't happen for them. So of course you want to reward yourself. It's like, if there's like one thing I learned about trading in the past 26 years, it's a permanent game against oneself, against my own ego, especially against my own fears and hopes. And on some days I'm on top of my game, on some days I'm not. Like last year, August, for example, also December, were very bad months. Where if I talk about very bad months, I'm talking about like -2 or -3%, by the way, not about losing 40 or 50%. But and like recovering from this on a psychological level, even after 26 years, of course it has gotten easier. Yeah, because I can like frame it into the bigger picture. But if you're just new, you know, and even if you have like, you found a trading strategy, you have proven by backtests, by validations, by Monte Carlo simulations, by all the statistical tools that are out there, you found an edge. And then somehow once you go live, it's a month where the strategy doesn't work so well. So it's either going sideways or it's going, in a drawdown immediately. You start doubting yourself, especially in the beginning. It's very hard to recover from this, but yeah, you have to hold on to things. This is like the thing everybody goes through. I don't know anybody who started trading and immediately became successful. Maybe with the exception of you, LJ.
Yeah, well, I mean, I sat there going like, what's going on? Why is this working? It's working too well. It's kind of weird. I was definitely very skeptical for some time, going like,
yeah, but this is also like a skepticism, like coming from the other side, you know.
Yeah. Yeah, I think like obviously the thing with wanting to pass the thing in the week, obviously it's because you're looking at the money on the other side, right? The best way to do it is take it slow, take it steady, because honestly, if you try and force it and rush it, you're probably going to blow it up, and you're just going to have to start again, and you'll be going backwards. And if you start again, you have to put in that same, making up those percentages anyway, taking the same amount of time anyway. Just to be where you could have been before, far less stress, far less cost input, and just taking it gradual. So it's always the best way to go about it. It's just like learning anything. You're not going to go and play soccer and be amazing in 2 minutes, or if you go to the gym or play basketball or swimming or tennis or bike riding or whatever it is, it's going to take a bit of time. So.
And you said it earlier about compounding. I think this is really the key. Yes, if you earn like 1% a month on a 10K account, that doesn't seem like much money. We're talking about $100 then. But as you continue earning this 1%, you automatically scale up your account. So it will come in account like of 20, 50K, 500K if you're a bootcamp trader, up to $4 million. And once you are there at like, let's say 500K or 1 million K, and you earn 1% in month return on investment on this account, we're talking about payouts between $8,000 and $10,000 already there. So that is, in most parts of the world, already a substantial income that, where you probably don't need to work another job anymore. Except maybe you live like downtown Manhattan or downtown Sydney or Hong Kong or whatever, but in the more affordable or even normally priced areas of this world, this will keep you and your family well fed. With the opportunity to put some money on the account. And if you do that on 3 accounts parallel, then we're talking about like $25,000, $30,000, $40,000 a month already. But this takes probably a couple of years to come to this, with a lot of ups and downs also. Yeah, in trading, the highs tend to be very high, the lows tend to be really devastatingly low, for some people at least. So take your time. Don't expect things, like LJ just said, to magically just appear overnight or within 2 weeks or 4 weeks. It's going to take time. But the nice thing is, probably if in your normal job, if you put in a lot of effort, and you should do that, absolutely, it's not going to massively increase your income over time. You're hopefully, if you have a fair employer, going to get a raise every now and then, but you're not going to have those massive payouts. You're probably going to reach something like 30 or 40K in month in income. Here, it might be lower in trading in the beginning, except you already have capital on the side, like $1 million by yourself. But if you go the way of becoming a funded trader and scaling up, it's going to take a longer time, but the upside later on is going to be massive for you. So yeah, you might not earn a lot in the beginning, or nothing even, if the evaluation phases, if the funded phases, maybe you start with a 5K account or a 2.5K account, but later on, the upside, because of the compounding, is going to be massive with you. So stick to your guns and do it for 3, 5, 10 years. If you have a strategy that works, of course, and you have solid risk management, the payoff is going to be huge.
Yeah,
and
definitely.
For me also, sorry,
Yeah.
just to close with that, for me also, the freedom coming with this, it's a great feeling of not, when I hear my friends always complaining on Sundays, tomorrow I have to go back to work, have to be in stupid meetings all day again. And I'm like, well, I go into my office and I do what I love to. I would do that. This is my hobby. It's my hobby made profession. I know that's always like easy to say and a cliche, but the feeling of relief that you don't have to report to any boss, that you can just do your stuff. It's really, this is for me really one of the major parts, not only the income, but the major benefits, because it lowers the stress level that I used to have when I had to go to the office and had bosses complaining, co-workers complaining, whatever.
Yeah, definitely. Exactly. I think, freedom, flexibility is definitely one of the biggest things. It gives you more control of your life in general.
Yeah.
Then hence more control of your life, you're gonna, on average, have a better, happier life. So, there was just a couple of these sort of technical questions here. Not technical, I don't know, whatever the word is. Why can't I sign into Fiverr's Hub? Is there maintenance going on? There was an issue, I think, for some people. Not everyone was getting it, but some people were having trouble logging in. I believe it's being worked on, or I believe it was fixed before. I don't know. If you are having trouble, just try refreshing, that kind of thing, first and foremost. The other thing you can often try to do is open like a incognito tab, and then try log in. Sometimes there's a problem with like the cookie data and that kind of stuff. So if not, the team is well aware of it, so it's being worked on. And then can we clarify the rules around one-sided betting? So one-sided betting is basically when, say, a market is falling like this. Let's just use this as an example here on the NASDAQ, where we had this, this is the 15-minute here, this big downdraft, and you continually try to short, like say or you continually try to long, right? So say it pulled back to here, you thought, okay, this is where I want to go long. Then, you've got something like that, you get stopped out, the market's clearly dumping, you enter long again, stopped out, it keeps going down further, you enter long again, right? Stopped out. And basically you keep trying to go against clear market activity in a sort of aggressive, unsophisticated manner, where you're trying to just force the market to do what you want and being kind of blind to what's actually occurring in front of you. So it's basically a heavy bias type thing. that, or as well when the market is rising and you're actually on side with it, but you take a long and then you take another long and then you take another long, and you're basically like heavily margining the account, and then you're way over risked, right? So the idea is to be measured and what's the other word I'm looking for? I don't know, thoughtful, I guess, with your trading, not just trying to come in here and wild west shooting off guns everywhere and just trying to gamble. Essentially, it's a anti-gambling kind of thing.
Yeah, exactly that.
Let's just scrolling through again as well. LJ, Dirk, can I do 1-to-1 risk reward on prop 1 and prop 2 and 1.2 risk reward opening the same trades on both? What do you mean? On like you've got two accounts with the fivers, both accounts with the fivers, are we saying? So one doing a 1-to-1 risk reward and the other one doing 1-to-2. And basically trading in the same direction on them. Is that what you're saying? If that's the case, you should be able to, because you can obviously use a trade copier, right? Which then hence they'll be copying the same trades. The thing would basically just be, again, the total risk, right? If you're going full, huge risk on one account and huge risk on the other, then you've got like stacked risk, because they're the same trades, same direction, same everything. So that would be frowned upon if it's too heavy. But if they're well considered, measured trades, like we were talking about then before, which I assume from what you're saying, like 1-to-1 RR and then 1-to-2 RR, you're doing that in a way of like almost like taking half the profit on one trade and then letting the rest run, but you're just doing it on two separate accounts. So in that case, from what I hear, that should be right. If you're otherwise concerned, the best thing to do is always reach out to support and just try put down like a detailed breakdown of what your intent is and what the rationale and the idea about the approach is, and then just ask through there.
I wonder in a case like this, why not do that on one account? Actually, I mean, you can have like multiple take profits. You can have multiple stop losses, in my opinion.
Yeah, I mean, normally, yeah. I mean, Dirk has a good point. You could just do it on one single account, to be honest. I don't know. It's probably easier to manage on one account as well, but it's kind of the same thing. I don't know. But from what you're saying, it seems like it should be right.
It should be all right, but as you rightfully said, so LJ, I would in this case maybe reach out to support and like ask this question in detail, because you don't want to run into a situation later, where it's forbidden or it's flagged for whatever reason that is, and your account gets closed. It's always good to communicate upfront. Like in a type of risk assessment, I think that's also very valued then by the risk department of a fivers to, proactively reach out and explain, this is going to be my risk management, this is my risk strategy. Are you guys okay with this, or am I going to run into trouble? But be careful also then, like, with this, that you don't do things like within a time frame of 10 minutes going 8 times long on two different accounts. That would then lead into trouble of, what was that called earlier from the question again? What you just
one-sided betting.
One-sided betting. Thank you.
Yeah. So the best thing is always like to ask beforehand as well, because if you go ahead and just do it and then there's probably going to be more leeway if you actually made the effort to at least try and find out and ask before and get clarification. So from what you said, it sounds like you're being sensible. So But yeah, what else are we looking at? I was going to say we haven't really talked about NASDAQ / S&P / indices at all today. We're very sideways, that's for sure. I very much get the tone that it's we're very unclear right now as far as the overall direction. Obviously, we had the rally up through there, closed the gap from last Monday after what was that, Davos, after Trump spoke, and he didn't rattle the cage any harder. So a bit of a relief rally.
We need Iceland.
Yeah, but I mean, for now, I'm not too crash hot on direction. We're quite mixed. I mean, the probability distribution for the 0 DTE options, for any guys that are wondering, this is basically the density of where market participants on average are expecting price to sort of sit going into New York at the rollover for the option expiry, in simplest terms. So what happens is the market tends to pull towards that as you get gamma exposure and the like. And then once you sort of play around that area, the market will then move one way or the other after that. But it tends to contain price until those options are cleared, which that is a touch higher from here. So I guess if we continue this, it's a pretty lackluster up move. I don't know if I'd be wanting to jump into longs for that to continue higher, or if I'd actually look to short again. Because we seem sort of stuck at the moment. I'm kind of wondering if we could see another move back to about 24K first.
24K, okay. I would be surprised, honestly speaking, to see without like additional geopolitical turmoil. That is, of course, to see prices move back that far. Because in my opinion, we've just bounced beautifully off the bull market support bands on a daily. And by the looks, at least currently of it, if we manage to close above the 8 weeks moving average, I think we are free to go much, much higher. Like potentially 26, potentially 26,500 over the course of like not today, over the course of maybe the next 2 weeks. Party could be spoiled, of course, again, by anything that comes in terms of geopolitical news or, weird tweets from certain heads of states. If we go down, hourly is aligned as well. Yeah, I get what you mean. It's like more, the lower you get, the less momentum is there currently. Yeah, especially.
It's just it's more the price action itself just looks very lackluster. I mean, I still see, indices going higher overall for the near term. Big part I'm wondering is whether further drop in the dollar will actually assist that, or if that'll be seen as sort of a negative sort of specter.
Yeah.
So I think indices are probably still the big one that I'm a little wary of, at least for the time being. Probably up until we get confirmation of the new Fed chair, I think.
Which also should be the case anytime now. No, I mean, and what? Sorry, what did he say?
Oh, and I was going to say, and assuming this bond market thing, Japan and everything stays calm and orderly. But yeah, isn't it meant to be pretty much this week or next week? He said he'd actually have a final.
I hope so.
Name. It's getting pretty long in the tooth. I don't know.
Yeah.
So he went back in fourth over at Davos. It seemed as though he hadn't quite decided. It seems very hard for him to find someone that will do the job well, or that is capable of doing the job, but also is going to just full bow to what Trump wants.
That's the thing, no? I mean, it's the job you least want in the world, probably right now, because you have to satisfy Trump, and you still have to the outside world, at least maintain this aura of being independent from the daily up and down mood swings of politicians within the administration. So yeah, one of the most difficult jobs and underpaid jobs for that actually in the world. I mean, what does that job pay? Like 150 or 200K a year or something, I think, no?
Yeah, I think it's like 200 or something. Considering what they do and the kind of spotlight and pressure and all that kind of thing you're on, But yeah, I guess the idea with that is part of that independence thing. They don't want people trying to take the job to get rich, per se.
Yeah,
It's
of course.
sort of a duty type thing.
If you keep the salary low, exactly, it's like you're going to attract low. I mean, 200K, of course, not low, but for a position with that much exposure, it is low, of course. But you want to attract people, that don't do it necessarily for the money.
Yeah, it's like a weird medium to me. It has to be enough that you actually get the right type of bright people that would bother to do it and still live reasonably, but also not attract the wrong type. So I think, I mean, looking at the NASDAQ here on the 30-minute, I feel like maybe some kind of move back into here and then a drive higher. I just don't like how we seem to be rolling over with this. I'm not sure. I think I'm just going to steer clear of NASDAQ. It feels too unclear for me today. And so that would be my general recommendation to you guys.
I also don't think we're going to get a significant move until New York comes in later. We still have durable goods, I think, also being released. Yeah. So that's going to have an impact. Is that at 2:30 my time? Or let me quickly look. That is coming at like Central European time, 2:30. So that's in about 2 hours from now, which is, I mean, it's like the forecast is plus 3.7% after the previous one was minus 2.2%. So for sure, markets are going to eye that a little bit. Not the most important figure, of course. There is like necessarily more eyes on Wednesday interest rate decision, especially on the press conference after the interest rate decision.
Yeah, durable goods are weird. I mean, I always hate the defense components of durable goods. It's really annoying.
Yeah,
it messes everything around. Got to pull it apart every time.
By the way, I am short Kiwi dollar right now.
Oh, really?
At 59.70.
Yeah. Did this pop up on your?
Yeah, that's like part of my automated system. I don't know why the position is not showing.
I still have to look at the stuff you sent to me.
All good. But I don't know why the position is not showing. There seems to be an API issue too. I reset the whole thing also because I discovered that I did a major flaw when trying to translate the backtested and validated strategy to an actual live trading strategy. I forgot one component, which was a momentum filter, which I used in the backtest, and I didn't apply that in the real live trading. So I was like, oh my god, this thing executes so many trades every day. How come I wasn't in the backtest like this until I discovered it? So I reset it now. Started trading on Friday, made a small profit in euro pound. And yeah, now Kiwi dollar, the second one. And I also started another strategy, which I don't want to talk about here, on an evaluation account. That's like a super secret.
Is it Kiwi dollar short?
It's a Kiwi dollar. Sorry, let me have a look again.
Or is it long?
It's automated. It's short.
Yeah. Okay. I'm currently short Aussie as well. So.
Oh, that's comforting.
So basically the same trade. Yeah. Yeah, I took it like I don't know, an hour ago or something. From 69.23.
Yeah.
Myself. Just give me 1 sec. do that there too.
It's actually like one of those trading pairs. When it comes to manual trading, I never touch. I think I never traded Kiwi dollar in my life because I always thought like, if I trade Kiwi dollar, I can as well trade Aussie dollar, the more liquid.
Yeah. No, I'm definitely the same. I always trade the Aussie instead. Yeah. More higher.
I have option data for that, and there seems to be a good momentum in the reverse direction of the max pain. So the system decided to take a trade, is going to close the trade when today at 4 p.m. CET, so in about 4.5 hours.
Nice. So I'm basically short from like here, just at the break there.
Yeah, you bet earlier than me then. Nice. Yeah. Good trade.
And then so this will be sort of TP1, TP2 basically, and then I'm kind of looking down there towards 68.90. So depending how much that actually runs, 1, 2, 3 through there. Highlight was saying I had a problem on Thingo where I got 100k in the spread. From the start, like do 20 lots or split in 10 parts. Not to go on about other firms or whatever, but I would say it depends what asset you're trading. If you got done on spread and at what time were you trading? Was it during active market sessions or was it right by rollover or something like that? Because if you're trading around rollover, there's no liquidity in the market. So spreads are going to blow out. Further, I'd say, what asset were you trading? Secondly, 20 lots is definitely pretty heavy on 100k. So instead of splitting into 10 parts, I would probably just reduce the 20 lots by 4, go down to like 5 lots, or maybe have 10 lots split into 2 trades or 4 trades or something. If you want to layer into something, but just going off the bat 20, unless you've got like a really, really solid, prices fully extended or fully based somewhere, and you've got some really, really core levels, and right, 20's a bit.
Yeah, don't trade 2 million notional on a 100k account. That's too much.
Yeah, exactly. So don't forget that each one lot is 100k, right? Exactly. One standard lot. So you're essentially taking a $2 million position.
Yeah.
Right there.
Can I pass account using this live trades? Thank you for the question. Please do not trade what we are trading here live, because those live trades here are always taken out of the bigger picture. They're just one part of our own live trading strategy. Our goal is here, not to be in the type of position as a guru, if there's something like this telling you how to trade. Like LJ already also said earlier, use everything we talk about here as inspiration on how you can go about to design your own trading strategy, because you always have to kind of take into account a situation like what happens if we don't do live streaming anymore. Then you're back to square one. You don't have any guru that you can copy anymore. So it's always the better idea of picking out the parts of what we are doing here and incorporating that maybe into your own trading strategy. That doesn't just count for us, that counts for anybody out there. Don't just copy somebody. You want to be your own trader with your own strategy.
Yeah, exactly. Sorry, just one sec here, just adjusting some stuff. Look, if you guys see some of the trades sometimes that we set up, and it sort of follows along with your approach, you might be able to use that as secondary confirmation. But like Dirk said, don't copy everything. We might be running that with other correlated or uncorrelated trades or hedged out sort of positions, in terms of like one asset is negatively correlated, so they'll balance each other out, and you might just be taking it raw. So a trade could go wrong, it could go right. And you should be obviously always trying to build your own system, right? Rather than coming in here and just relying on that. Because some days it might be good, some days it might be bad. That's trading. And particularly though, like I said, it's within the broader context of the rest of our portfolios or other varied accounts that we have, where you might, have all these other trades that are counteracting one particular trade. So then hence you might be willing to take a little bit more risk or a little less. Maybe you've stacked up some profits that day already. So there's a lot of variables. So I would encourage you to develop your own thing. Obviously, you guys seeing it here can't exactly stop you, but the idea is to go and build your own systems rather than just trying to directly copy stuff. The other thing with copying trades from anyone, if you do that too heavily, it will get flagged by the team as well. So, and then you can get your account banned and stuff. So
that's the thing also. No? Imagine now us, let's say for whatever reason, we share now our exact trading strategy with you. And because we feel so altruistic, today we are doing that. And that would not only flag our own accounts, it would also very quickly flag your account, obviously, because suddenly we would have like 50 people trading exactly the same strategy. It doesn't work like this. Apart from the edge, like we said earlier, being very, very fast arbitraged away. So it's really, really important to find your own strategy. And by all means, not necessarily finding the strategy, but the back testing part of it, which in the past was like really the painful thing about it, like going through the charts manually if you're not sufficient in coding in Python, for example, but even then prone to making a lot of mistakes when it comes to daytime errors, different time zones, and so on. I'm speaking of experience there. That was like always an issue for me and prone to mistakes. But nowadays with AI, especially with something like Claude Code, you can backtest your strategies actually very fast and quickly find out this is something that works, this is something that don't work, this is something that has potential, but I need to get back into the strategy and modify some things so it really has potential. So it's never been easier to find a strategy nowadays, but remember, everybody's doing the same. So the amount of time probably where a strategy is losing its edge over months or years is also getting lower. I see that, for example, in my option trading strategies at the moment, that the edge is slowly eroding, which means there are probably a lot of people out there who do the same as I do and has been working beautifully for years for me. And it's now coming to a point, not quite yet, but to a point where I consider either I need to rework my strategy when it comes to options trading, or I need to totally shift away to something else because there's just not enough money to be made anymore without taking a considerably higher risk, which I'm not comfortable with. I think that's also going to be the story of the next years, that like edge erodes faster and you need to reinvent yourself all the time.
Yeah, especially with AI. Yeah, people using these tools more and more. So Hart was saying, okay, you don't just take 20 lots, you just use a lot calculator, and it's just measuring out the 1% risk when it comes to 20 lots. I'm guessing is what you're saying. But the spread took your entry very badly. I tend to risk 1%. Look, the thing with spread is part of markets. It's part of trading. So what it sounds like, I mean, spreads are pretty good across the board. Any reliable outfit will have really good spreads these days. So if you are getting knocked around by spread, chances are you need to just take that into calculation, right? So probably expand the stop or the entry or whatever and recalculate the spread cost into the transaction cost, right? That's part of the market. That's sort of what it sounds like to me. As far as gold, I saw someone asking about gold just before. Jonatan, so look, I mean, gold's had an absolute ripper up to 5,100. Peaked at what, it was 5,110 or so, 5,111. We're consolidating into this little sort of triangle pennant type situation here. I would be saying, look for either a break to upside for another leg higher or a breakdown. From here, most likely, I think it will be the US data later, durable goods. They'll probably tip it one way or the other. But I would not be trying to exactly take outright bets without some kind of confirmation break at this point, because I wouldn't really want to short this at the moment because of the momentum. At the same time, not particularly keen on going long from this standpoint, since we've already had such a massive run today. Very susceptible to coming right back off, $40, $50 an ounce pretty quickly. So I would say just watch price action into these lower timeframes. When you see a clean break and when that momentum is accelerating one way or the other, then you could potentially look at jumping into it. But yeah, these were some rough trades I scrapped out just here as a potential idea. So you can see where these levels would come in, the sort of breakthrough there or breakdown of here, and you could go down to some of the price support. But yeah, I don't really like gold for today. If you didn't catch it earlier, personally, I would say, come back tomorrow for gold. It's sort of ran through today. Or else wait till New York.
Yeah, definitely.
At the very least. Yeah.
Welcome, Richard and William.
Hello.
With a new beautiful decoration behind you guys.
We got power back.
I do not.
You don't?
What I do have is backup generation.
Okay.
Yeah, we've got a generator.
So I noticed you're at least at home again, so.
Yeah, but it's dark because I've literally only got my PC and my wife's PC and the Wi-Fi hooked up to the generator right now.
Wow.
Oh my gosh.
That's what I call determination, really.
Yeah, I had to just at some point do something about it. We haven't had electricity since Tuesday last week. It's almost been a week now without electricity.
Yeah.
That is like we had that in
like a gas burner.
You were both saying something I didn't hear either one of you two.
You go, Dirk.
I said we had this in Berlin, in South Berlin, shortly before after New Year as well. Well, the power was out for I think like 50,000 households. Power meaning also heatage being out. By the way, for 50,000 households. So there were people, dying in their homes at like minus 8 degrees, really, in some cases.
Jeez.
So it's not only a South African thing; it's also a German thing, obviously.
I mean, we've been dealing with this electrical issues for 10 years now, give or take. Yeah, let's not get into our service providers being lax. How are you guys? How's everybody doing?
Pretty good.
Good. Had a good weekend. It's chill. It's Australia Day today, so it's a long weekend here. Everyone gets rowdy, the whole country, that kind of thing. So it's always a good weekend.
So what is it's Australia Day?
Awesome stuff.
Today, yeah, public holiday today.
Oh,
But,
okay. Cool.
I'm still here. It's all right.
Well,
I didn't run away.
happy Australia Day.
Yeah, no, I did some stuff on Saturday. So today I just chilled. I actually got to sleep in, so that was good.
Oh no, dude, that's good. That's awesome.
Today.
Dirk, I'm assuming it's not German Day, is it?
Sorry, what?
I'm assuming it's not German Day today.
It's not German Day, no. That one, the reunification day is in August.
Okay.
Sorry, in October. My God, what I'm saying here. And I live in Eastern Germany, so.
I was about to call you out on the fact. How did you not know it wasn't October?
No, it's just a normal, cold, gray, snowish, freezing day here in Germany.
Blistering hot over here, so very different. But yeah,
Same.
yeah,
It's also blisteringly hot, like 34 or something.
death.
And humid.
Yeah,
So
it's humid as anything here. Still,
Every-
it's like 9:30 now. It was 37 earlier during the day, and yeah, I don't know. We're due for another massive storm, surely, because
37 degrees, 1 billion% humidity, raining spiders. You gotta love Australia, man.
And that was just today.
And that was just today.
Yeah.
Normal day.
I was gonna say, when is raining spider season in Australia? Because isn't that coming up? I thought that was September time. Is it not?
Yeah,
Raining spider season.
it's multiple times. It's different kind of
Yeah,
spiders.
when like all the spiders like sort of like spray their web up and like the wind takes them, you can actually see like spiders flying.
My nightmare, really. I'm going to gym.
I'm sure. Yeah, there is some random spiders that do that in some places, and there's I forget where it is that. I mean, there's the photos always go viral of like the whole place just covered in cobwebs, like trees and.
I was gonna say I've seen like pictures of like parks and they've just been covered with webs, and you're like, oh no. I'm not scared of spiders, but not even I would want to go see that. Like that would just creep my skin out.
Hans, bring the flamethrower.
I will get it.
All right, guys. I gotta make a move. Have fun, and I'm going to see everybody out there, and including LJ, and you guys too, on Wednesday. Same time, same spot. Have fun, stay safe out there, and be careful with those precious metals and when you're shorting them. Take care, guys. Bye-bye.
Thank you for the advice, Dirk. Have a really lovely day.
Awesome stuff.
See you, Dirk.
Dirk, have a great one, brother.
I'll have
know if
to
you guys
jump
have
out
seen
in a second as well. So my partner's.
Yes.
So, I was going to say though, yeah, this is this is how hot it is, Rich, right now. Like
Crazy.
I brought this up earlier. We're just dying over here.
Yeah, that's crazy.
Oh, dude, that's
So, yeah.
wow. That's crazy.
Yeah,
No,
that's bro, that's like that is woof.
I'm at a
Wow,
loss
that is
for words for you, mate. That's oof,
Yeah.
that's rough.
Yeah, no, like it's warm here, but it's like a sticky warm. It's like a humid warm. But wow, that just like you saw how close to China we are there, and like we were on like the sort of medium level of heat, and it's quite warm here. I can only imagine how hot it would be down there.
Yeah, dude. Oh, it's been death. But yeah, I gotta go. I'm gonna actually try jump in the pool first here after I let my partner in because I want to cool off and then I gotta cook dinner. So I'll see you guys tomorrow.
Yeah.
And yeah, ciao for now. Okay?
All right, bro. Nice one, man. I'll see you in a bit.
See you guys.
Yo, what's up, world?
What's up, Rich?
What a week!
Hello.
What a week!
Oh,
I haven't
don't
had a
even
trade,
get me started, my friend.
dude. I haven't had a
Yeah.
trade since Tuesday morning. Was it Tuesday morning? I think it's.
I had a
Tuesday
trade last Thursday, which was okay. Yeah, but other than that, bro, same as that. Like same as that. Even so, my personal account, I had my first trade last Thursday. In fact, on stream, I took the exact same trade on my personal account as on my stream account, and I banked out for about $800, or I think it was like $1,500 or $2,000 on my other accounts. So that was super nice. But $800 on my trading account, so I was pretty happy with that in the end. That was quite nice. But oh mate, it's just been chaos here. Like I don't know if you've seen what I sent on WhatsApp. That is my Wi-Fi at the moment.
I just saw it now, but I didn't even know that you were having troubles because I had
mate.
Like just nothing.
Yeah, fair. I was gonna say you had no electric, let alone Wi-Fi. Like at least I've just had one issue.
Yeah, this is where I had my last trade. It was on the 5 minute. Where did it go now? No, oh, come on. Over here. How did I lose it again? There we go. This was the Monday. I had a buy somewhere over here. I think it was over there. I had a buy. And then on Tuesday, I had a sell coming into somewhere over here on NAS. And that was literally my last trade since last week. Didn't have electricity over here. Didn't have electricity over here. Nothing over here. Today, still don't have electricity, but we have at least got a generator. So, yay us.
Well, that's something. I was gonna say, at least you got power now, which is something. You're not living in the dark ages anymore.
Yeah, well, it is what it is, as they say. 'Tis what it is.
'Tis what it is. C'est la vie. That's life.
Yeah, that's life. Let's have a little hello greeting from everybody in chat.
Because
Sorry,
I'm having such bad Wi-Fi, I'm not going to be able to bring chat up, but I shall say hello nonetheless.
all good, all good.
Remy.
We've got Remy in the background. Remy is legit the best in the background. I just need to kind of like see where we were lost.
I'm trying to find so I put all these posters up, and I didn't actually know like what it would look like and where the camera would be. So I'm having to like sort of reorganize. You guys get to watch me put up posters live. So congratulations on that, guys. You're welcome.
We have
you get to,
Thiola saying hello, Richard and Will 9 minutes ago. Dubakor us saying wow, a week. Yes, a week. It's not unheard of in South Africa. We used to go through something called load shedding for a good like 8 years, where you have segments of the day where you have power and segments of the day where you don't. What is the type of people you don't want on the fivers? Very simple. We don't want gamblers, and we don't want people that are not going to take it seriously. We want people that genuinely want to prove that they are the best traders. We want people that have consistent risk parameters. We want people that genuinely want to learn. We want people that's a part of the community. We want people that just shows up and is a force of good within the community and the prop sphere in general. So yeah,
I was going to say, it's not even so much
we don't want
trying
people
to prove themselves to be the best.
Yeah.
It's someone like just trying to prove to us that you want to be the best version of yourself and trying to improve as a trader. Like, even if you don't have to be the best trader in the world, but if you're showing that you're trying to put in the best practices possible, then like that's what we love. We love to see growth.
Yeah, very, very much so. And the thing is, the Fibers wants to grow along with you. That's the thing. We want you to join us. Prove you're a good trader. Even if you're not a good trader, we're going to help you become better traders. And then we want you to participate with other good traders. And together, everybody just brings their A game. And even if you do have an off day, that's fine. We're going to work on it psychologically. We're going to work on it emotionally. We're going to work on it strategically. We're going to do all of that stuff. So the only people that we don't want is don't want people that goes against that ethos. We don't want people that are going to gamble and treat this like it's a game, with the intention of just trying to hurt other traders as well as the fivers as well. That's who we don't want.
Yeah, exactly. Does that look a bit better? I feel like that looks a lot better.
Cello saying, how about Euro NZD? I'm in a sell swing trade on daily. Do you think it has more downside capability? So Euro NZD, you guys have to really apologize. I do apologize. I have not looked at a single chart in almost a week. So the two streams that I had last week, I really, really struggled to kind of like look at anything since last week Thursday. So Euro NZD. So Euro NZD over here. You said on the daily, you're in a sell. This does look like a very nice potential continuation lower. So first and foremost, if we just look at, where is this? If we just look at where we are currently at a base area where price tried to, this is on the daily by the way, where price did try to push lower and then started pushing up again and volumetrically pushed up. So this was the last day where we had real bearish attempt to try and push price lower. We are at that point right now. Today it seems as though we gapped. I will go down on the lower time frame just to kind of like see whether or not we gapped. It does look as though we did. We do have this slight area of consolidation up over here. I don't know if you guys can see my screen all that well, but we have this area over here of consolidation, which was preceded by the highs all the way up over here, which have been tested. So we have an area of consolidation, which is also the highs. We broke out of that area of consolidation over here, tried to come back into it, started pushing a little bit down, retested it again, and then pretty much over here we really failed to really push higher. So we had this secondary area of consolidation that has been broken. So it does look as though we're starting to come into a very nice bearish order flow on the daily time frame. So what are we looking for? Only on the daily specifically. So if we just remove those two areas, we just take the last highest point, which was all the way over here. That was the last highest point. And then the most recent price structure where price over here started. So this was all consolidation, and over here it basically lost that consolidation and started pushing lower, so creating a new downward trend. So we will take this very last area of the consolidation and we will say that this was the break point. So this area is the break point. We broke lower from this area and started to do one retracement, secondary retracement. So where can we go? If we do carry on breaking lower than where we are right now, now bear in mind, I don't know exactly where you got in, but I can definitely see us potentially coming and testing down here, as well as if we carry on pushing lower. Do we have a... We don't really. We have a little bit of consolidation all the way down over here that had a breakout, retest, and continuation. So potentially this over here. So if we do fail to push higher, we do break through where we are currently. So 198 to 197. If we do break past this point on the daily, I can definitely see us come down to 197 to 1963. I can definitely see us do that. And then post that, we do have a small little area over here to test if we carry on going lower. So 19411 to 19337. And then obviously past that, we have this larger area. It does look like it is definitely starting to create a downward trend. So you're seeing something in that line. It looks good on the daily. Oh, I wanted to check on whether or not we actually had a gap this morning. Yeah, we did.
I know we didn't. So we had a gap on silver, I believe. I saw the guys chatting about that earlier.
Yeah, so we opened up over here. So quite the gap. What is this?
Yeah,
this
huge,
199,425 was the open of the day, and then we had the close at 198,867. So that's quite the gap. That's 55
Yeah,
pips
that's quite a bit
of gap. So yeah, but
I mean, at least we try to close it relatively quickly.
Yeah, no, it filled it pretty immediately, which is usually a good sign for continuation towards the opposite direction, let's rather say.
Yeah.
Yeah. I
Also,
would
guys,
say...
I've now finished my backdrop. I realized that I put them all together and my head was covering them all, whereas at least it spreads out a little bit more now. Let me know what you think about the setup now. I feel like it looks a little bit better. I feel like I'm just due some lighting. Once I get some lighting in here, I think we'll be cooking on gas then, guys. I'm starting to make it feel a little bit more homely. So, but back to it. Sorry, guys. I just digression into the pretty chuffed with that. Anyway, carry on. Sorry, Rich.
It's all good, mate. Like on the daily, on the hourly, if I have a look at, we had the reaction of the daily open was in line with a base area as well. So price was pushing lower when it came back to this point. Obviously, it was with this gap. We did have a strong reaction out of it, starting pushing lower. So it still does look a little bit more bearish than bullish on even the hourly as well. Down on the 15, I mean, we did sweep this low point of the year of Tokyo of last week Friday. Didn't close though. I'm still inclined to say Euro NZD is a little bit more bearish, especially if you look at the daily. The daily is definitely more bearish.
Yeah, hugely so. I like how it's broken out that bottom zone as well. But where it broke out of that bottom zone, consolidation. especially if you go down to lower time frames, that breakout of that higher consolidation into this downward trend just shows momentum.
Mm.
Which is quite nice.
Yeah, I can potentially see us still try and push a little bit lower, but the question is how strongly. I don't know whether or not it's going to be a particularly strong move. It is Euro and NZD, and I'm not really seeing a large amount of volume to try and push it lower. But it is bearish. It's definitely bearish.
Yeah, 100%. Yeah, it is bearish, clearly so.
Let's see. Sorry, guys. Dubakor is saying, no, mate, it is going up intraday, NZD, or will range. I don't know where you see on Euro NZD it going up right now. It's definitely not going up. Unless you're having a look at like the lower time frame, like on the 1 minute or something like that. Even on the 5 minute, we're a little bit more sideways than we are any range. But I was referring more to what Selo was asking on the daily. The daily, we're definitely bearish.
I think, however, even on the intraday, we could potentially pull back before that continuation. Like even using the daily time frame as an analysis on a higher bias, I think we could continue up a little bit higher. But I think then it will start dropping if you look at the higher time frame as confluence. So Dubacor, I do think that potentially it does have a lot of potential to go up. But I'd just be careful because you are higher time frame counter trend trading then.
Yeah, I'm just going purely on the fact that we gapped up higher. We gapped higher on the day, and then we came into a base area and then immediately reacted off of that quite strongly. And since then, we have not come back to it, even though we had this very choppy price action during Tokyo. And coming out of Tokyo, we started pushing a little bit lower high. Yes, we did not create a lower low, unfortunately, but still, we're still within that on the day, pushing a little bit lower. And on top of that, I've just drawn an area of interest where we've had multiple reactions, slowed reaction, trying to break through, failed, slowed reactions all the way over here, tried to break through, failed, breakthrough, retests, tried to break through, retest, tried to break through, eventually breaks through, wick test. So this to me looks like a very nice area of interest, and we did break through it. We already had a singular reaction, and we were about to have a secondary reaction. Yeah. Euro NZD to me is definitely bearish, even on the lower time frame. This is on the 5 minute as well. Tough Feeder is saying, or Through Feeder is saying, AUD USD great location for shorts. AUD USD. There we go. Let's have a look at the daily. Whoa, look at that gap. That was very, very bullish from last week. The whole of last week was massively bullish on AUD USD. Oh, I see why. I see why you would think that this is a good area to sell from. Makes sense. Yeah, look at that.
Go back to current price.
Yeah, that looks good. I can understand why, but this reaction here.
I was going to say that.
Does that scream, I want to go?
I mean, to be fair, I could see why you'd think it's it's a perfect location for shorts, but I don't know. I feel like you'd be brave to short it, but I understand why you would be shorting it. So, like, if you said to me, I've just taken a short from this location here, I'd be like, yeah, I can see why, but I don't know why. You know, like, good for you, but I wouldn't. You know, it's like one of those.
You know what?
But yes, it is a very...
It has had multiple tests on this area. So once again, it's a base area that is created here. We have 1, 2, almost a third one. Didn't quite reach that one. Definitely a third one tested there. And now the fourth one. However,
what would worry me though is like it's either going to reject this level or it's just going to like smash straight. It's going to rip through it. Like that would be the only thing that would worry me on this current price action. Like it's either going to play out perfectly for the shorts, or it's just going to rip.
Yeah. So the way that I think most base areas would be reacted from off is you're either going to slow your way into that base area and then completely slow down, like your momentum like completely dies off, and then you start turning and then pushing lower yet again. Or in this case, you're just going to shoot through it. It hasn't shot through it though. And as of it, this is on the daily, and there's already been 14 hours of the day that has been, that's over. On my time frame, obviously. And it's pretty much nowhere. Its movement, once it reached this point, has completely slowed down. So look how flat this is. Very, very, very little movement. So I'm going to say I kind of agree with the idea of this could be a very good area to sell from. Purely because we've had reactions from this area previously, definitely. And secondly, on the lower time frame, we're really slow. We're very slow in this area. Momentum has died off significantly. Particularly in an area where we've already had a previous reaction as well. So I can see shorts take over. I don't think it's outside the realm of possibility. I think there is a chance for it, yeah. Intraday saying raining spiders. If hell is real, that's Australia for sure. I mean, right now it's blisteringly hot.
Yeah, no, 100%.
They have the world's...
If hell has a location on Earth, it's in Australia. I don't care. I'm sorry if I've offended Aussies out there. Don't care what anyone says. It rains spiders. Everything that can kill you lives there. The heat is blistering most of the time. Give me a better reason.
Well, they have lovely people, and pretty much Britain sent all of their criminals to go and colonize Australia. So if maybe to Britain they were like,
"Yeah, that's literally what happened." Yeah, Australia is literally built on criminals. However, it's a nicer place than Britain, in my opinion. Anyway, like I've met some not so nice ones, but 90% of the Australian guys I've met are amazing people.
They sent all of smart criminals to Australia and left all of the not so smart ones.
Yeah, literally, and just left all the dumb criminals in Britain. I thought, they're too smart, so let's go get them to colonize a massive desert plain and fight the alligators. Let's send them over there, and if they survive, then we'll be friends with them. And that's pretty much how Australia and Britain happen.
Yeah. Martin, I'm saying, hello, Will and Rich. Hello, Martin. How are you, my friend? I've missed you. I haven't had any day to go and look at your messages in the Discord, so I'll go and have a look when I have a moment. Celo saying, been in the Euro NCD since last week on the daily, in profit on a sell trade. Yeah. So I get why you want it to be in Euro NCD. It makes sense. It looks good. I mean, if you were in if you were in early last week, you're in proper profit, mate. Yeah, you're in proper profit. I mean, it has slowed down ever so slightly on, what was this, Friday. It slowed down a little bit, tried to push up, and still there. But I think there's still a chance for you to carry on going lower, my friend. Keegan saying, good day, Rich and Will. Good day, Keegan, mate. How are you? DJ Pickman, how are you?
Keegan, how are you?
Thought feeder, why would you want that though? What was this in relation to? Strong winds also drive snakes into houses in Australia 2 to 3 times a year. You get a snake tornado. Yeah. Nobody wants
Here, raining spiders, snake tornado. To be fair, I've seen some videos where like snakes are being curled up in toilet bowls or in like sink bowls.
Yeah, that's fun.
I've seen.
We have it here as well in South
Yeah,
Africa.
I've seen videos.
Especially closer to the national park, the Kruger National Park. Whenever there's an outhouse or something, you have to be really careful because there might be a snake in there. Baram is asking, hey mates, is better to have boot camp or two-step account? Personally, if I had the option, I would take the two-step account every single time.
Really?
Yes.
Oh, wait, well, do you say boot camp or two-step?
So the high stakes. So the boot camp is...
Yeah. I was going to say, yeah.
I'll take the two-step account every single time. If you go and compare the two, with the boot camp, you have 3 phases, 1, 2, and 3. Simple. Every phase, you must make 6% in order to pass the phase. And you have 5% of drawdown available to you for each one of those phases. So you effectively have 15% drawdown across the 3 phases, but you have to make 18% in profit. Okay. Now, it's not impossible. It's very doable. However, that follow through that you have doing the first phase, then doing the second phase, a lot of people get disheartened after the second phase, thinking they're doing all of this effort and they're not getting to fund it then yet. Okay. So it's a lower target with 6%, but you have to look at all 3 phases before you're funded, which is 18%. But with the two-step, the high stakes account, your first phase is 8%, which immediately people are like, oh, 8% so much. It's better to look at the boot camp. But then your second phase is only 5%, which means that you only need to make 13%. And on both phases, you have 10% of drawdown, which if you looked at it the same way as I've explained it now with the first phase, you have 20% of drawdown across the 2 phases. And you only need to make 13. So just purely from a mathematical standpoint, it makes so much more sense to take the high stakes. And that's my preference. I take the high stakes every single time over the bootcamp.
Yeah, 100%. Yeah, same as that. I as much as I love the other, so I mean the high stake, not the high stakes, the hyper growth is a pretty cool idea. Quite like that, but for me, high stakes all day long. The two-step is just so much better in my opinion. But I suppose it depends what you're into. You know, it depends how your brain works. Because I think that's the most important thing as well, is understanding how your brain is going to react to the trading. Because everyone's different.
Yeah, that's why I said my personal preference is the high stakes. I really do love the high stakes. I probably won't get a bootcamp account again. I'll probably get a hypergrowth one at some point, but
yeah, hypergrowth I feel like a good one. So all of the Funded Freedom. So if you guys haven't seen it yet, we've just released Funded Freedom episode 1 of the Italian season. Where me and my brother actually traveled through Italy. So go feel free to check out Trade Delicious or Funded Freedom episode 1. I don't know if Remy, if we can like find a link to drop that into the chat. If not, no worries. But go check that out, guys. That is actually with a hyper growth account, I believe. It's a 40k hyper growth account, I think. Was it 20k? No, it's a 20k account.
It was pretty good. I enjoyed it quite a bit. Yeah, it was a 40k hyper growth.
It was. I thought it was. I was going to say, yeah, 40k hyper growth account is what we actually traveled through Italy on.
Yeah, like I said, I watched your first episode. It was so cool, mate. But
do you like it? Yeah, it's so funny.
I remember we were still streaming, and you were in the airport. And we were still talking about, maybe you should take this.
Yeah. In fact, there's actually that in it. I'm pretty sure there's a clip in episode 1 of me in the live stream in the airport in Venice, I'm pretty sure.
Yeah. I can't remember exactly whether or not we agreed or disagreed with what you were doing at that point, but I think we were all like, wow, this seems useful. Scribbles off.
Yeah, I remember... Go on.
Sorry, you wanted to say?
I was just saying, I remember Victor saying, I was in a gold trade. I remember Victor saying, Will, don't forget that you're in a gold trade. I was rushing through the airport and I actually forgot that I was in a gold trade. And I'm not going to give any more away. If you want to find out what happened, you're going to have to go check it out. Because it is, oh, dude. Like, me and Ewan, so my brother who I was recording that with, or like traveling through Italy with, dude, we were in stitches, man. Like, even watching it back, even though it's us, we were laughing so much.
Scribbles asks us. I think this is a good thing for us to discuss. Scribbles asks, what if I have made an emotional mistake as a beginner on challenges, but then redeem those mistakes? Will this affect being funded? I've struggled the past 2 days heavily with FOMO and in a minus 0.16% drawdown currently. So he asks with a follow-up, do I start a new account or redeem my mistakes on this one? Will, what is your opinion on this? Because I have a very clear opinion.
Awesome stuff. So, yeah, absolutely. So, excuse me. So you're actually in a challenge at the moment, but you're currently max net loss of 1.6% drawdown. I'm assuming, if I've read that correctly. Mm-hmm. Now, you've struggled the past 2 days heavily with FOMO. That's absolutely fine because starting a new account isn't going to help with FOMO. You're only 1.6% away in drawdown. You're only 1.6% in drawdown underneath flat, so underneath like below zero. Dude, that is not that bad. Like, let's assume that you're doing a 1% risk per trade. That's only technically like a 1.5. Let's go 0.5%. That's only 3 trades that you've lost if you're risking 0.5%. Like, bro, that's really not that bad. Like, I know you're new here, Scribble, but you, like, the guys who are currently watching now, so my Wi-Fi is not great at the moment, but I will try and like bring up my account real quick. Now, I've taken this account from phase 1 through to phase 2 into live phase and gone into 7% drawdown. So 7% drawdown, I've clawed that back because it meant more to me doing it in front of you guys to show how much like sort of dedication, discipline, and patience it takes to be a profitable trader. Because I could have just gotten a new account. I could have gotten a new account and passed phase 1, phase 2 again and said, yeah, cool, here we go. But that shows nothing. That just shows I can pass an account. Anyone can pass an account. You know, sometimes it can actually be better luck than judgment. You know, so it's what doesn't take luck than judgment. What takes more judgment than luck is to be able to be disciplined enough to take an account, no matter where it is in its phase, whether it's phase 1, phase 2, live, drawdown, profit. It doesn't matter where it is, to be able to take it from a sort of point of almost what you feel to be no return, which Scribble, I believe, is where you are now, to actually passing an account or getting paid out takes a lot more mental capacity, a lot more mental gain and resilience than it does actual strategy. So for you, Scribble, what I'd really recommend is just look at that as drawdown. It's just a couple of trades that you've lost. 1.6% down is nothing. I have gone from 7% down to, I think, like my closest to break even was at 0.5% down. And then like I've gone back into, I think I'm like 1.5 or 2% down now. Like I said, I'll bring the account up in a second. But I haven't quite yet hit break even. Nearly, but not quite yet. I've been at it for about 3-4 months now on this account from 7%. But we're getting there. We're getting closer. It's all about patience. It's all about understanding your strategy. So, Scribble, the best thing I can recommend you do is just forget about the P&L and understand that you've got a strategy, you've got a system, you've got risk in place. Follow your strategy. And if you blow the account, then you say, do I get another account or do I wait a little bit and test my strategy on a demo? That's the only question you should ask, is when you've officially blown the account, not due to FOMO, but due to following your edge with precision. What about you, Rich? What's your thoughts?
Take me off of screen quickly for a second. I need to close the blinds here because the sun is killing
me. Yeah, no worries. Yeah, absolutely. Dim problem, my friend. So yeah, Scribble, that's the best thing I can recommend you do, mate, is just take it easy a little bit. Even if you have to go back to a demo account, or what you can do, it depends on what your risk appetite is like and what your mindset's like. If you enter a trade and you lose a trade, and then you're like, I must now FOMO trade, I must now re-enter in all sorts of other risk, then what you should be doing is take a trade. If it loses or wins, then you can go ahead and maybe go onto a demo account. So if you take a trade and it loses, boom, you're done. That's what your risk is saying. That's what you're done for the day now. Go on to a demo account and close your funded account, your live account, your whatever account you're using. Go ahead and close that until the next day. But if you feel like you really must scratch an itch, then go ahead and open up a demo account and just play about on that. What about you, Rich? What's your thoughts?
I agree with everything that you've said. I would just like to add that this account that you have now, there's no reason for you to give up on it whatsoever. 1.6%
drawdown. That
is, it's like you're gonna go through drawdown. What I think is the most important thing is the fact that you've realized that you've had some habits, or you've had a little bit of some bad decisions, or even you've given into some FOMO and whatnot. This is all fine. The most important thing is that you've realized it. You've come to terms with the fact that, listen, I have an issue, or I had an issue. You can only move forward from here if you decide to put steps in place to prevent yourself from falling for those same tricks again. So FOMO is a whole thing. The thing about FOMO is that it even the most seasoned of traders will sometimes fall into the idea of should I, shouldn't I, should I, shouldn't I? Oh, I don't want to miss this. Oh, I should have gotten in. Oh, I shouldn't have gotten in. Oh, so FOMO is a daily struggle for most people. So don't fret too much about that. This account that you have, great, mate. It's good. Carry on with the good practices that you had with the demo account. Try and get back to those. Understand that it's a marathon. It's not a sprint. You're in it for the long haul. So don't get into a habit of trying to buy a new account because one account seems lost. It's not lost. So I don't know what account it is specifically that you have, but you're still going to be sitting with 8% of drawdown at least if you have a high stakes. So if you've lost three trades and you risked 0.5%, you still have another 17 trades before you lose the account. If you're still risking 0.5%, it's really not the end of the world, my friend.
What I said to one person, so one person told me, they're like, Will, I'm awesome at getting out of drawdown, but the moment I get out of drawdown, I cannot trade in profit. And I said, right, okay, that's absolutely fine. I'll tell you what, let's work on this together. And they said, Will, what do I do? Like, I'm fantastic at getting out of drawdown. I love being in drawdown. I love the pressure. My risk brain really kicks into gear the minute I get into drawdown. How do I pass an account? I said, right, okay, look, so you like risk. You're in 13% drawdown. What do you mean I'm in 13? How? I don't understand, Will. How am I in 13% drawdown? Well, you've got to make 13% to pass phase 1 and phase 2. Therefore, picture it as your account should be or was at $113,000. You're now in 13% drawdown. You've now got to claw your way back to $113,000. And if it goes, okay, yeah, but what if I pass it? I was like, well, let's discuss that when you pass it. He ended up passing his account. I said, right now, you're in, let's say, I don't know, $120,000 account. So you have a $120K account. You are now in 7% drawdown. You need to claw back. It's like, but you just said I was at 113. I was like, yeah, but who actually what's a $113,000 account? No one has a $113,000 account. You're actually in a $120,000 account. You're just in 7% drawdown. Get out of drawdown. And he ended up taking a few payouts with that method of thinking. So it's all about changing the way you think about it. And like I said, some people hate that. Some people will think about that and go, oh my God, I'm in so much drawdown right now. I'm going to blow the account, even though they're in 2% profit. However, other people like to think that they're in an 80K account and they're actually like 13% up when actually they're actually 7% down. But yeah, are the maths right? Is the maths in on that?
Well, it doesn't have to math. The concept matters.
Yeah, the maths doesn't have to matter. So it's the concept that, yeah, exactly. It's the concept that you're having towards your brain, how you like to see drawdown. So if you like drawdown, if you like being in underwater, then rearrange and shuffle your brain around to actually make the maths work for you. If you hate, yeah, exactly, yeah. So, and if you hate the drawdown and you like being in profit and you trade better in profit, shift it again. Whereas if you're a realistic or a realist, there we go. So if you're a realistic person that says, look, well, I am in the crap here, or I am, you're super straightforward, it's black or white, then just deal with the fact that what's in front of you. You know, it's all about readjusting what works for you and readjusting how the brain works. Now, I've spoken at several events in London, actually, regarding this and sustainability in trading. And I find that most people's issues when it comes to trading is the fact that they can't seem to shift their mindset. They cannot seem to adjust and tweak their mindset to work for them. What they do instead is watch people like myself and Rich and think, that's how I must trade. You're exactly what I must trade like. No. What the real Will and Rich are trying to say, what the genuine people out there that are trying to help you will say, is try and find what works for you. Now, Scribble, try and find what works for you, my man. Try and understand how it's going to help you and how your brain is going to react to the profit and to the price and to the drawdown, because I am actually $100 better off than you are. I'm in the exact same position as you. I am 98,500. So I've got $98,502 in my account right now, which means I'm 1.5% down. Now, I was actually 2% down, but I managed to make about $800 last week. So if I go ahead and bring up my history for you, not last 3 days. I'll tell you what. Let's go custom period. Let's go a week ago today, because I took some losses last week as well. So we took some losses here: 98, 42, 152, 138, minus 81. In fact, you know what? Screw it. Let's actually bring up all of January, and let me show you that some weeks or some months are losing months. So this trade here was just because I didn't trade all of December, and I was getting close to that 30-day inactivity. So I needed to place a trade quick. So that's just a quick 0.14 cent trade. Now, the rest of the trades are losing trades. All my genuine technical analysis were losing trades. Nearly $400 loss, nearly $300 loss, $100 loss, 42, minus 152, minus 138, 81, all in the red. And then all of a sudden, 164 and 648. That was my first winning trade last week, and that was Euro USD and Euro JPY. One was on my intraday with EU. The other way was EJ on my 4-hour swing trade strategy. I didn't want to hold it over the weekend, so I closed it on Friday morning, I believe. Technically, it was my time Friday early morning. It was like 4 a.m. my time. So I closed these trades out, and that was the first wing trade I had all month. Now, net, I'm actually down nearly $400. However, it's managed to claw me back nearly $800. So I was actually 1.2% down overall for the month. So we've managed to claw that back. So not every month is going to be a winning month. And I'm a very profitable trader. I will be completely honest with you guys. I've managed to make a profitable strategy out of trading this account only on stream. And I've done it in front of you. I've been very open and honest about all my trades. And I've shown you it's possible. So I will give myself a pat on the back and say I'm a very profitable trader. However, doesn't mean I'm consistently a profitable trader each month. November and December were break even both months. January lost 1.2% up until end of last week, where I clawed 800 back. So it's actually a minus $300 month. Therefore, that's not profitable trading. However, I managed to make like 6.5% September, October. therefore very profitable. It's about the overall game. And like Richard said, it's a marathon, not a sprint. And make sure you remember that. I hope that helped. That was a bit of a rant. I do apologize.
Thanks for that, Will. That's very insightful. Ia is saying, I'm trying trading for the past 2 years, but I can't grow my account. I'm always new to trading. Interesting. Question for you, Ia. Have you gone and actually looked at what aspect of your trading is the thing that you feel like you're always new at? If it feels like you're not sticking to a specific strategy, are you strategy hopping? Does it feel like you come to the market and you don't know what you're seeing, like you don't have a focal point to start from and then build off of that? Go and look back at what it is about trading that you're struggling with specifically. Is it risk management? Are you struggling to hold to a trade, intro trade, and hold it to fruition, either stop loss or take profit? Tell us a little bit about your strategy. How do you view the market? Because it's very difficult for me to tell you exactly where to go and look and say, this is your problem, without you giving us context. I need context. So give me a little bit more information about your trading style, what it is that you're kind of looking for. Are you more of a trend following trader? Are you somebody that works on supply and demand, support and resistance trading? Give us a little bit of information, and then we can maybe see if we can dissect it and then try and find an area where you can go and have a little look at. There are some general things that you can do as a trader, that even if you are an intermediary trader, so not quite a beginner, but you keep falling for the same faults, you keep stepping into the same traps, there are certain things that we can assist you with general stuff like that. But give us a little bit more context, and then we can give you a little bit more information. I see there's a few people asking about gold. Gold is ranging at the moment. It does look like it wants to start moving as I'm speaking. Are you zoomed in or something? Oh, there we go. Thank you. Gold has been a little bit flat for the day so far during the London session, but it does look as though from down here it wants to potentially start pushing a little bit. We do have this very flat London session, but this is not unheard of. If you go back to most London sessions, this one had a bit of a pullback and then a slow upward ascent. This was on Friday. Same thing on Thursday. Little bit flat, and then eventually, as we came into New York session, we started climbing up again. Same thing over here. This is Wednesday. Coming out of Tokyo session, a little bit of a pullback, a little bit of an ascent, and then flat, and then a reaction pushing lower. So not unheard of for the London session to be very flat. So I would say just wait for the breakout. Pretty much. We have a little bit of a range right here. Just wait for a nice clean break. Break above, retest, potentially push higher. But also the opposite side as well. So if you do see a strong break push lower, wait for the retest and then potentially try and come and retest, say for argument's sake, down here for Tokyo session, or an area where you've had a singular reaction already. But I think we're more inclined to have this. What do you think of gold, Will? Do you think we're gonna have a bit more of a push higher?
I'd love to see a break above that zone. So I don't know. I'll bring my screen up real quick. I'll do a quick analysis on gold, but I'm gonna my screen for a bit because I can feel my Wi-Fi getting a little bit twitchy and a little bit sensitive about it. So I don't wanna upset my Wi-Fi with half an hour of this session to go, which would be really annoying. However, I think gold would be really cool if we can close this bullish. Close with very little wick here, coming into a little bit of volatility now as we head into New York session. So it'll be, we're coming into that sort of lunchtime crossover. I got to keep looking at my phone as a reference to like Hong Kong local time, and then like my computer I've left in UK time, which is really nice. So now that we've got this 5-minute close here, I'm actually going to go ahead and place just a small order. I'm going to go and place 0. No, I've got cap locks off on my. Let me try again. 0.2. And I'm actually going to go ahead and place a buy. There we go. So I've actually gone ahead now and placed a buy on gold. Going to drag my stop. Ooh, have I done this right? Yeah, I have.
think.
Okay. Well, so say again.
Did you market enter or did you want to do a pending?
I market entered. Yeah, I market entered in this one. So there is a break and retest possibility up here. However, we'll see how this goes. Now, we'll have a look on the 15-minute as well. But because we've had such a powerful buy candle on the 5-minute here on gold and a break above this current consolidation, there is entry criteria for me. So why not enter if there's entry criteria there for you? We've got a little bit of flat market, as you said, over London, but I'd like to see the markets move back a little bit. There we go. So my second entry criteria there. I'm going to go ahead and buy one last time. There we go. So as you guys know, I've got a break and close, and I've also got a break and retest. This is my break and retest. My break and retest, I'm actually going to put down here as a hard stop. And then my break and close, I'm going to leave as a discretionary stop. So we'll see how this goes. I think I'd like to see it take these highs up here, which I believe on
New all-time
gold
high.
is all-time highs at 5. Yeah,
Five-
I was going to say, but I believe that's all-time high at 5K.
So I see
Doesn't look
we
like
have
it's
a
gonna
few
do well.
new people, like new to the Fivers, not only to the live stream, but also new to evaluations with the Fivers. We have Marius Robocop saying, hi everyone, new to the channel from South Africa. How's it, my bro? Question, gold keeps making all-time highs. Are the expectation around 5,150 to 5,200? I mean, we've already reached 5,111, and I feel like we've reached it a lot faster than, for argument's sake, most people would have considered. We were at 4,000 not that long ago. We were at 4.5 not that long ago. So us being at 5,000 is crazy. It's really crazy. Do I think that there's still more of an upside? Yes, I do. Do I feel like it is a specific number like 5,150 to 5,200? I mean, round numbers tend to be, a psychological level for a lot of people, but this is uncharted territory. We haven't reached it yet. I think we can, but I would not base a trade around the idea of us definitely hitting it. I would rather go on a day-to-day basis and just kind of like see where we are and then have some test point and then pull back a little bit and then get in on a better price and then push price up higher. Saying hello, Richard and William. Hello, Louis. Intraday sent a message to Scribbles. Try to reset your risk management rules and strategy. If RM didn't help trading, is hard, as you know, only 5% make it, so keep it up. Thank you for that one, Intraday. We really appreciate the support that you give also to Scribbles. Cello, okay, we'll wait to see what happens. Been in the sell since last week. Thanks, guys. Yeah, Cello, I think your trade, your Euro NZD trade is pretty good. So just be ready to exit the trade when your exit parameters align, when they start showing up then. It's Vinny. What do you think of NZD USD? I have not even had a look at it. Let's have a look on the daily. Okay, so very, very bullish over the last week or so. From Monday, just bullish, 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 bullish. We are right now at a last area where price tried to push higher, failed, and then volumetrically pushed lower. Overall, we do have a higher area of interest all the way down here, which was tested, was created, tested once, twice, a third time broken through, and then pushed up volumetrically and didn't come back to it. So very bullish, I would think. We do have this downward channel over here. That was not drawn very well. Let's try again. We had this downward channel over here, which we tried breaking lower but failed, and then eventually broke above, retest, and started pushing off. So this does look like a very strong attempt at a bullish push. Question is, where do we react? I personally would wait for a bit of a retracement and then a continuation higher. Even though this was an area where price has reacted, where we are right now on the daily specifically, I would want it to either react away from it, so start pushing a little bit bearishly for a few days, and then show a slowed momentum on the lower time frame that it doesn't want to carry going lower, and then start pushing bullishly, start having another bullish candle, and then I think we can definitely go higher. However, we can also just absolutely smash through this area, retest, and start pushing higher, trying to aim for that recent high all the way over there. So that's also something that I think can happen, you know, something like that. So if this is the test area, then something like this. Yeah, that looks pretty good, I think. Erpina is saying we have sausage sizzles. Yeah, oh yeah, so probably super hot there by you as well. AH is saying, I'm new to the Fivers. Fingers crossed I get a few good runs to hit 8%. Dude, good luck. I would say...
Sorry, man, I'm just going to interrupt you there.
Yep.
Just to let you know, guys, I just smashed out on a stop loss there. So minus 380... minus, in fact, actually, let me give the exact. Minus 399. So there we go. Just hit a stop loss on gold. We just completely reversed and invalidated the whole idea on the 5 minute, which is just how the market goes. You know, gold has been a bit odd recently. So yeah, we hit a stop loss on that. Time to move on to the next one. The 15 minute could have been a little bit more valid, I suppose, but the 5 minute gave me everything I needed.
Yeah.
So yeah, I entered it. But oh well, stop loss on that one is what it is. Let's move on. So back to, there we go, Scribble. Just to let you know, I'm now worse off than you. I'm now yeah, I'm on 2% down.
So AH, I would say make sure that you just stick to your processes. Make sure that you have a good, solid plan, both mentally. You have a physical plan, so make sure that you get enough rest, that you're hydrated enough, that you arrive at the market with peak mental and physical capacity, and then just see where your trades align, or the market aligns with your strategy, and then just trade your strategy. Alphinius saying, hi guys. Jamil Strom saying, stop being racist. That's really difficult for us white people. I'm joking. We weren't being racist at all. Martin saying, to be honest, didn't make anything last week. I didn't saw any good A+ opportunities. Fair. I know that Victor is one of those people that would straight up tell you, if it's not an A+, don't take it. Just straight up, just trade your exact strategy and don't try and overcomplicate it. Don't try and look for things that are not there. Just wait for your strategy and then trade your strategy to the best of your ability. Let's see how let's see now NQ. I see something there. I was having a look at NQ and I'm seeing the potential for a possible push higher. We had this little bit of an area of consolidation over here. We had a nice volumetric reaction. We're trying to push lower, but failed. And now it does seem as though we want to potentially start pushing up higher. So, yeah, this is on the 5 minute. What does the 15 look like? Yeah, there is a potential. I mean, we did have this area over here. Price pushed out of it, retested it all the way down here, so and then started pushing up from there. Retested again, very, very strong reaction candle that, and started pushing higher again. Let's see what this candle looks like on the next 10 minutes or so, on this 15 minute to close. If it closes bullishly, there is a potential for us to try and push price up higher. we can maybe potentially come and test all the way up over here, or alternatively test this very first area, this port of call. So what is this? 25,590 maybe. 25,600. I think 25,600 if we do close bullishly on this 15-minute now. Otherwise, this could potentially be a reaction off of this swing point over here, and then it's that trying to push price lower from here. Let's see. Let's give it a moment.
Awesome. Just seen a couple of comments as well. Guys, again, I happen to read the comments on my phone, so I do apologize if I'm a little slow to them. Scribble, thank you so much. Absolutely, my man. And seen Edda saying that Davis is a good, really good trader. Thank you very much, man. I really appreciate those kind words. Scribble saying, sorry, I hope you're all right. Thanks for showing. Absolutely. I am more than all right. I'm actually happy I took that trade because it was part of my plan. If it wasn't part of my plan, then I wouldn't be okay. But I am very much okay. But thank you for your kind words. And that's what it's all about. Guys, I do apologize. I couldn't show it on my computer. However, I will make sure that I am showing everything on my phone if I can't use my computer.
Yeah, thanks for that.
Absolutely. Also, just seen a quick comment. Oh, go on, mate.
I was going to say, Brian saying, I've been clawing one of my 50K accounts up and down in drawdown for a year, and I won't give it up. It's a labor of love, that account. Awesome, mate. Like, don't give up.
Yeah, absolutely.
What kind of question is this? Back to the school, back to the old school. Have you ever had a dream/nightmare about trading? Dude, I don't remember any of my dreams or nightmares, so it's really difficult for me to tell you.
Bro, really?
Yeah, I genuinely, I don't
have.
remember my dreams or my nightmares at all. So I don't know. Maybe it's like a defense mechanism. If you have like a really bad nightmare, then your brain's like, nope. Forget that. If you have a really good dream, then your brain's like,
Forget
nope,
that. It didn't happen. Move on.
Yeah, carry on. Yeah, I don't remember my dreams at all.
Yeah. Oh, dude, I've had so many dreams and nightmares about trading. I actually had one dream back when I was streaming on LLTF with Richard Wells when I was in my phase 1, just before past my phase 1. I actually had a really odd dream. And so this dream I had was I was in a trade and I remember it wasn't going my way and I full margined on the trade. Like I risked my 100% drawdown on the trade and it started like shooting up into profit and then like back down. And then it wicked up into profit again and then it was shot back down. And then I ended up waking up as it was about to hit stop loss and like rushing to my phone next to my bed and like checking my phone, checking to make sure that it wasn't actually true. So that I think that's like why I don't hold overnight is because I think it's one of my biggest fears. It's trading throughout like overnight when I'm sleeping. So yeah, man, it was. I think that's one of the only trading dreams I remember. But yeah, I mean, I've had loads. I've had loads where I've hit stop loss or where I've had like, I don't know, I've had kids and then like my kids have been trading and like on my phone thinking it's a game and then like I've blown like millions. And so yeah, I've had lots of odd little dreams and nightmares about trading, but that's the one that felt the most real. Like I genuinely thought that it was a real dream, like a real trade I was in. I don't know, can you hear me okay? Because my Wi-Fi's sticking a little bit. Okay, that's right then. Seeing another comment as well, just saying, Will, do you have Instagram? I do, actually. It is Will_Davis_official. I am blue badged, so if you're trying to find me and you find someone that looks like me, make sure it's got a little blue badge. Otherwise, don't get scammed. I don't trade crypto either, so don't let anyone think that I'm wanting you to buy into crypto. So yeah, Will Davis official. You'll be able to. I don't really post much of my trading, unless it's something that I'm like currently in, or maybe if it's like a juicy trade or something. It's very much lifestyle. It's very much like day in the life sort of stuff I post on that. But feel free to go reach out to me or give me a message, or maybe just go watch what I'm up to in Hong Kong. It's but yeah, that's my Instagram. Oh, I dropped out again. My Wi-Fi's gone, or Richard's gone. One or the other.
I think mine is screwing around. I can't. Everything is like.
There? Oh, he's back.
I think mine is screwing around.
Oh, is it your Wi-Fi? Oh, that's a pleasant surprise. That's a change.
Oh no, okay, I'm back. Okay, I just had to have a look on the YouTube. It was completely frozen for me. Like I'm looking at.
Oh really? Okay, fair. Yeah. I was going to say I could hear you perfectly, but I thought maybe it was me.
No, okay. It seems as though it was mine a little bit, but it's caught up again.
Okay, I'm not saying that I want you to have bad Wi-Fi, but I'm over the moon. It was you, not me.
Yeah, the stream platform is also refreshed.
Oh, okay, fair. Yeah,
it's Shane Chamberlain saying, "Have you ever gone full tilt mode? I got my payout with the fivers beginning of January, and then went full tilt a week later. I could not manage to win a single trade for about 2 weeks. Every decision was bad. Why did you go full tilt after getting a payout? You got your payout, and then you went full tilt. Why? Full tilt.
I kind of feel like
you allow anger to take over, and you're tilting. So
not necessarily. I feel like sometimes it can be almost over optimism.
Yeah. So why did you go full tilt? What led to you deciding to just absolutely throw caution to the wind and just throw haymakers? Generally, when people have a payout, it's usually followed by a little bit of like I wouldn't say an inflated ego, but like more the idea of like there's that little bit of a boost of confidence. Like, congratulations, you've passed an account, or you've gotten to a point where you get a bit of a payout. There's that little bit of an ego boost, just a little bit of confidence. But why would you have tilted? If you don't mind, Shane, just giving us a little bit more, tell us why. Why did you go on tilt? What was it was it something outside of trading? Was it something after you got your payout that maybe, little bit of an ego boost allowed you to kind of like not take it a little too seriously, or you didn't take it seriously enough? Like, tell us a little bit more.
Yeah, I part of me, I feel like it's going to be maybe a tickle of ego. I think maybe the idea of this is now real, it's paid, it's in my account. I'm no longer looking at numbers on a screen. I'm now looking at numbers in my bank account. I feel like sometimes a lot of people will be like, oh my God, that's amazing. I'm now going to just see if I can risk 100% and see if I can get like a 20K payout because I saw someone with a Lamborghini on YouTube in Dubai doing it. I feel like that a lot of the time that's what happens. Whereas I think if you just, I don't know, I think that would be, I feel like that could be his reason why. I feel like because it's now real, and maybe it was his first payout, like especially if it's your first payout. I know my first payout, I actually went straight to an Aston Martin because I was actually in a city with my parents at the time, getting one of our cars serviced, and then I actually went straight. I beelined straight to the Aston Martin garage the minute that I think it was just over a $3,000 payout I got on my first payout, and I beelined straight to the Aston Martin dealership and nearly bought myself a Vantage. So it was that. It was that impulse of optimism. I'm so glad I didn't. So glad I didn't, because I didn't make money after that for a couple of months.
You would have left your amazing car behind while moving to Hong Kong. Such a shame.
Yeah, well, exactly. That is the only reason.
I think it was mostly because of fear. I lost a funded account before and questioned every choice I've made instead of staying confident. It was his third payout. All right, okay. So
Oh,
I think maybe this is a fear response in the sense of your brain is trying to tell you that you don't deserve this. So you've gotten your payout. In this case, it was your third one. And then what followed up was you probably having, I don't know, maybe a bit of imposter syndrome, thinking that you don't deserve this, maybe that you're not a good enough trader. And then what follows is the decision points that you take. You're trying to prove to yourself that, yes, I am indeed, a failure, or I am indeed not worthy of this, or I am indeed an imposter. And I think it's important to realize that everybody is going to, at some point in their life, going to look at something that they're doing and they're going to lose a bit of confidence. They're going to feel like, I don't deserve this. They feel like this is above them. Just remember this. Don't take that account and put it on a pedestal. It's not bigger than you. You're not bigger than it. It is two completely different things. If you are ever feeling like, there's this fear that you're going to lose it, just remember, what actions did you take to get to a funded phase? What actions did you take to get to a payout? And focus on those and try and emulate that, because that is success. You have proven to yourself that you can do it. It's the same as discipline. Every day that you have an opportunity to implement discipline, every single day, it means you're a disciplined person. That one moment that you're not doing something according to your discipline, or you're not doing it in a disciplined fashion, you're undisciplined. So understand that you're not going through stretches of discipline and then falling away. It's every day you have to attempt to be disciplined. And every day that you're not practicing discipline, you're undisciplined. It's the same thing with this. Try and focus on what it is that you did to get to funded and to getting into payout phase and to get to a payout, and just emulate that. You've proven to yourself you can do it. Whatever other stuff that you have mentally, like fear about losing an account, that's in the past, mate. If you're going to lose an account, so what? It's going to happen. But you've proven that you can pass, and you've proven that you can get payouts. So focus on that.
I think if you're going to be afraid of your payouts, then you're going to suffer from not getting them. I think it's as simple as that. Don't forget as well, like what Rich said, is what got you there will keep you there. And that's why I hate to see traders say, I passed in a week, because there's a good chance more times than not. Now, there are other fantastic examples that defy this, but when you pass in a week, there's a higher chance of you losing it within a week, because what got you that high risk, that high reward, will get you that high risk. Now, myself, I've had an account in phase 1, phase 2 for about 7 months, and therefore I know how to battle through different seasonal plays. I know how to battle through strategies not working. I know how to battle through, drawdown. So therefore, think about it this way: an animal with lots of scars is an animal that knows how to survive. An animal that has never seen war will not know how to survive in tough times. So therefore, when you see a lion with scratch marks everywhere, maybe blind in one eye, and all sorts of scarring, there's a good chance that lion's really been through the crap, but its survival rate is going to be so much higher than any other cub out there. Same with you as a trader. If you've seen all sorts of market conditions and you've survived them, you're going to sail those waters better than anyone else. So just remember, just practice patience.
Yeah, very much so. Never asking which session, or for session, which indicator you use, Richard. So I use Market Sessions by Leviathan. So you can, I've written it down here, but this is also the settings that I use. I'm on UTC plus 2, so I use the UTC plus 2 time zone here at the bottom, and then I just have the Tokyo, London, and New York session, and then the times that I have here is based on, I have the LSE market hours that I go and have a look at, and I just make sure that it is aligned with that. So I use LSE market, so it's tradinghours.com, then you can go and have a look at the market hours, but that's what I use. And I purely use it for the visualization of it. which falls in line very much with the follow-up question from Adil. Adil is asking, which system is better to build one based on indicators or a naked chart system without anything except candlesticks? Personally, I think that there's place for both together. But in general, if I had this just like that as an example, so I only have an EMA and another like combination EMA on, but in general, this is what I use. So these are boxes that I draw myself, but this is generally what my chart looks like. It's effectively a naked chart. If I were to remove the Leviathan one, the market sessions, then this is what it would have looked like. The market sessions I use just as a visual tool. I'm one of those people that would say, if you can find a way to simplify a process, simplify it. In my case, I could go and draw up specifically every line and say, okay, here we have the Tokyo low and here we have the Tokyo high, blah, blah, blah. I can do that, but it takes mental processing to do that. And I would rather just have a visual indicator to say, there you go, there's the information. So I honestly think that naked charting is ideal because you can get caught up with what an indicator is showing you. So imagine if I had a strategy that I built around EMA crosses and I see, oh, okay, this is the 50 EMA. Here we have on gold, we have a cross right there. And then I decide, okay, I'm going to base a strategy around the idea of the EMA crosses. The moment it crosses, I enter a trade. I aim for the latest swing point and I look for that swing point down there as a take profit. So a 1-to-1, something like this, as an example. And then I'm going to base it purely on that idea. And now I'm saying, oh, okay, no, it's not working. All right, cool. Now I'm going to wait again. Here's another cross over here. And then I'm going to enter a trade over there. Same idea. I'm going to put it right up there, go for a 1-to-1. And lo and behold, I'm going to be stuck in drawdown the whole way. So I think people kind of get lost in indicators. They get caught up in it. And just remember, an indicator is just showing you information that's already on the chart. So an EMA is a moving average, which means that the time frame that it used, in this case it's a 50, the one that I have on is a 50. So the last 50 candles' information is taken. It smooths out the average above across all of them, but it weighs the last few candles a little bit more heavily towards where the price is. So an EMA in this case, price is, if it's showing, the EMA is showing, let me see if I don't have that input on status line or a value line. Price line, there we go. So on average, with the EMA, over the last 50 candles, the price was averaging around 5,088. It's a visual representation, it's all it is. So I would say naked charting is better, but you can use extra information if it is used as a confluence and not like the absolute basis of your trading strategy. I don't know if that makes sense, Will. Using naked charting as the basis of your strategy, using indicators as a confluence, don't have the indicators as the basis and then the other things as confluences.
Yeah, 100%. I think understanding order flow, and I feel like social media is getting a little bit better this way. It's getting a little bit healthier, but I think order flow is the best key when it comes to building a strategy. Now, indicators are great. Not saying they're not. I actually use indicator, the EMA, the moving average, or just the MA. It's just a simple moving average. So I use a moving average on my higher time frame, on my sort of 4-hour swing strategies. So I'm not saying they don't work. They really do. Believe me, I think they're fantastic. However, on an intraday and just on an idea of knowing how to trade, I wouldn't use them unless I had the fundamental knowledge of how to trade basic order flow and price action that's in front of me on a naked chart. So yeah, 100% agree with you there, mate. It's just a matter of understanding what's working at the time and what's working there for you right there and then, because it's great to use as a confluence, but I wouldn't solely rely on it.
Yeah, no, I agree. Andil is also followed up by saying indicators are based on past data. They often tell you to buy after the price has already moved. Yeah, but it's not entirely the idea that it tells you after the fact. It's the idea that it shows more often than not, like you say, it's a lagging thing. Most indicators, if not all indicators, are lagging, which means that price needs to print first, and then the indicator will follow up. And then only once the price has, let's say, closed, in this case, if I look at the EMA and I look at the inputs, what source does it use? It uses the bar close. So the bar needs to close first before this EMA will lock its position at that time. So you have a data object window where I can click on the EMA. Oh, wait, where's the information? Data window, there we go. It shows you all of the information where it was at that point in time. So it's going to move around. The EMA is going to move around up until this candle closes, and then it will lock its position. Anyway, the point that I'm trying to make is that it tells you to buy after the price has already moved. Technically, what it does is it shows you where price was. So when price does come back to it, you can then decide, do I want to buy or sell from this position? Because in the past, price has reacted off of this zone, as an example. So if price comes back to the 50 EMA and starts pushing away from it, is that a sign that I need to sell? It could be. But that could be needs to be aligned with what is structure doing. Are we in a bearish trend? Are we in a bullish trend? Are we slowing down? What's the momentum? What's the volume? Are we in a area of high interest? So there's a bunch of questions that comes and it gets added onto that. Okay, price reacts, I should buy. Price reacts, I should sell. So, but I agree with you. Not that I was disagreeing with your statement. I agree with your statement. I wanted to just add on to it. XAU Slayer, how to avoid greed? Difficultly. It's very difficult to avoid greed. I think you're muted, mate.
Yeah, fair. I was gonna. How to avoid greed? Don't be greedy.
Don't be greedy.
Oh my.
Greed is the
dude. This is one of the most difficult things, I think.
Can you hear me, mate?
Yeah, I can hear you. Can you hear me?
Yeah, okay, I can hear you now. I don't know if there was a bit of a delay.
I was just. I think trying to master greed is one of the most difficult things. I feel like greed has a lot more to do with you as a person than it does with you in the market. And this is what I mean by trying to simplify and understand you as a whole and sort of understand the correlation between your life and trading. And I know it sounds really cringy and no one wants to hear it, but you got to understand who you are as a person before you start mastering greed in trading, because your relationship with money in everyday life.
I think we've lost Will. Let's see if he pops back up again.
Am I back?
There he goes. I think we lost you for a second.
Okay. I don't know where I was, but basically I was saying your relationship with money will have a direct correlation with your relationship with trading. And I think it's really important to remember that and understand who you are and sort of master your personal everyday life. And then you'll master the trading. Like, you can't be greedy in life. You can't be like, I want money, 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 money. I want more. I want nicer this. I want nicer that. I want better this. I want better that. Once you humble yourself in life, you'll humble yourself in trading. You cannot want the penny in the bun in life and then go, yeah, but I'll be a humble trader. It doesn't work like that. It's humble life, humble trader. Greedy life, greedy trader. There's a direct correlation. And that's why a lot of people say trading is a direct reflection and like a mirror when it comes to your personality as a whole.
Yeah, I agree.
That's the best part I can give. Other than like I can't unfortunately give you how to master greed textbook. That's the biggest thing I can say is just self-reflection. Understand who you are as a person and how could that reflect and be mirrored in your trading journey. That's the best I can give you.
I would go so far as to say that when it comes to greed, Greed is a difficult thing to get over purely because people put so much emphasis on the value of money. I need X
Yeah.
amount of money to do X thing in a day, and so on and so forth. And I think that in general, if people had put less emphasis on the importance of making money, and rather having the idea that money is supposed to work for you. You know, you're supposed to earn something that you can then use to make your life better, that kind of like thing. Try and disassociate the importance of that specific trade, that specific entry that you're about to make, holding that trade a little bit longer than you're supposed to. Try and disassociate the value of what you stand to gain and what you stand to lose, and rather try and focus on making sure that your process is being followed properly and the value that you're following your process can provide to you, rather than saying, okay, if I'm going to enter this trade, I could have made $1,000, but I only made $500. That's greed, but that's because you're valuing that extra 500 way more than what you actually got. Because to you, money is super important. So you blow it up. You blow its importance to you up. Try and disassociate a little bit from it. Try and step back a little bit and say, you know what? If I follow good processes, that will probably lead to me making that money naturally instead of me trying to chase it. And
Yeah,
then slowly but surely the idea of
Yeah.
making that money kind of like dwindles down, becomes less important to you. And then you start focusing on improving rather than chasing.
Yeah, 100%. And like Maya said, lions are, traders, professional traders are Scarface lions. Yeah, 100%. Myself included, we've had to go through that struggle to then understand that we need to humble ourselves outside of life. Like, I can guarantee, Rich can give you all the sad stories, he can give you all the soppy stories, he can give you all the lessons that he's learned, but it's going to mean nothing to you. But to him, it's going to mean a deep, deep amount, to the point where he's respected his relationship with not only money, but with his life and with other importances. He's prioritized other things rather than money. And it was the same with me. I realized that I've got to prioritize a lot more to other things in my life than I have with money. I've realized now that I've got to use money as a tool to achieve certain things and to unlock doors. Think about money as a key in a room full of locked doors.
There goes Will again. Adil is saying, treat it as a business. Remember that trading is about consistency over 100 trades, not hitting a jackpot in one day. Agreed. Kamal is saying, trading is just gambling. You get lucky or unlucky. No, mate, I'm going to disagree with you. We had a discussion last week about gambling. Gambling has set outcomes. And no matter what input you have, the outcome stays the same. So if you can look at roulette as an example. You have odds, and the odds are based on the amount of outcomes that there are and the amount of results that you can have based on those outcomes. So if you have a roulette table, it has 36 numbers and one green number for a single zero, two green numbers or two green slots basically for double zero, and three green slots for a triple zero. So that takes you from a 1 in 37 for a single zero table to a 1 in 38 for a double zero, and then a 1 in 39 for a triple zero. So these are odds. That means that every time, every single roll of the ball is an individual event. And every single one of those rolls will always have the same probability of getting hit mathematically. So there's always that probability. It doesn't matter. No input that I have into it is going to change that. Percentile of it happening. Trading is different because I can take a loss as an example. If I had taken this, I was just marking this up. If I had taken this as a trade, I can choose how much I lose. If I put a bet on with roulette, ask the dealer whether or not you can take your money back as the ball is rolling. If the ball is about to land where they tell you no more bets, ask them to pull your money back. You can't do that. They're going to chase you out. Okay? So with trading, I can at any point say, you know what? I'm losing too much. I'm done. I can pull out. And if it goes into profit, I can decide where I take profit as well. So if it starts pushing into profit, I can take profit. Now the thing is, I can choose to a certain level. I have a certain amount of input into what kind of outcome I'm going to have. Am I going to have a loss or a win? Yes, that's technically the only two outcomes that you have. But it's not 50-50 because the outcomes that you have so much more based around it rather than just the roll of a ball on a field. So it's not gambling in the sense as you're thinking of gambling. Because it's not the same.
I'm going to disagree with you and give my reasons why, because I'm going to be very careful when I disagree with you, because I agree with everything you've just said, which is ironic. Now, I disagree with you that it's not gambling. It is gambling, 100%. If you don't have the appetite for it, don't do it, because it is gambling. Stay in a 9 to 5 work. Stay 9 to 5, because that's not gambling. You're going to get paid. Don't go to university though, because that's a gamble. Because you're going to go study for 4 years and get in some serious debt to come out with not even a guarantee of a job. You're going to have to go into job interviews, and you're not even guaranteed to get the job that you studied to achieve. So gamble, don't go to uni. Don't even think about opening up a business. Even as a baker, if you want to become a baker and you want to open up a bakery, don't bother gambling. Why is it gambling? Well, you're going to spend a lot of upfront costs. You're going to try and bake. You're going to have time, money, exhaustion, stress, loans. But your bread may be amazing. It may be the best bread in the world, but no one's going to buy it. You have the risk of no one wanting to buy it. Don't bother. What else can we come up with? Gym, that's not gambling. You're guaranteed, you lift weights, you're going to get stronger. So that's pretty guaranteed. What other, any business venture, job interview. Don't even think about going for a job interview. Scrap it off. Don't even think about it, because you're not guaranteed to get the job. It's a gamble. So don't even bother. You can get yourself the highest probable chance of getting that job, but don't bother. It's gambling. Okay, so at what point do we say that life isn't a gamble? Because we all know you're guaranteed that you're not going to make it out the other end. You're guaranteed to come to that end of the life. Don't even bother. It's a gamble. You don't know when you're going to go to sleep for the last time. You don't know if you're going to wake up tomorrow. Going to sleep is a gamble.
Okay, we get your point, mate.
What is gambling? There's a gamble in everything in life. Life is a gamble. So it's about understanding there's higher probable gambles and lower probable gambles. You go to a casino, there are extremely low probability gambles. You go to a bank to get a loan, to get a business, you're increasing your probabilities, providing you've done your research and your outlook and you know about the business and the industry that you're opening up. Trading, you're increasing your probabilities by opening up through an A+ setup trade. You're increasing and decreasing and fluctuating your probabilities when it comes to the gamble of that trade. Yes, I fully agree with you. Trading was 100% gambling, but it's about controlling the probabilities of your trade. So yes, everything in life in general is a gamble. It's about what matters and what is worth the gamble. Bungee jumping is a massive gamble. That's why you'll never see me bungee jumping. I don't want to do it. However, parachuting, skydiving, I kind of fancy that. So I kind of want to take that gamble. I know the risk, I know the reward, I know the probabilities. Still going to do it. So it's about...
So what you're mentioning here is all good and gravy, but it's not the definition of gambling. So thankfully, we have a definition of what is and what isn't gambling. So first of all, have a look at what is the definition and then dissect from there. And then you will realize that, yes, even though everything seems like a gamble because it's unknown outcomes, doesn't mean that because it's an unknown outcome, doesn't mean that it's not measurable. And if something is measurable and you have known outcomes, but your input makes no difference, then it's gambling. Meaning, if I enter a trade I will be doing that with a very specific reason, and I can control to a degree where and when I take profit, where and when I take a loss. So there is decision points that I can play around with. With gambling, there are very little decision points. You have put bet on table on number, and then ball rolls or card gets dealt. You have very little decision in that specific moment and very little that you can do to impact the outcome. I can impact the outcome of a trade to a degree, a lot more than any person at a gambling casino of sorts can do while playing a gambling game. So that's why I'm saying it's that input. I can put a bet down, I can take a trade. It seems the same because you're thinking you don't know the outcome. But with gambling, the outcomes are known because it's a game of probabilities. There's mathematical equations around it, already known. It's there. You can go and search on the internet. You know exactly what is the probability of a single roll of a dice.
Absolutely. One thing I am going to do, Rich, is because I have been told several times that my dinner is ready, so I'm going to shoot out in just a second. First things first, though, I'm going to say hello to this absolute handsome gentleman here, Victor. What is good, my man? What I'm going to do now, real quick, I'm just going to read out a couple of the comments, and then I'm going to duck, dive, and dodge because I am going to go have my food as it is getting later and later, and it's 9:10 at night. So just a real quick one. Very good point, Will. Thank you very much, Alphinius. Yeah, thank you guys. Appreciate you all. We come out. We appreciate you as well, my man. Just a couple of comments here as well. I agree. If trading is gamble, life itself is a gamble. Everything is a gamble, man. It's about working the probabilities in your favor. Willie really took it seriously. Of course, my man. Of course. You know, I'm not actually that serious about it, but it's a fun topic and a fun conversation that I enjoy talking about. Life advice from a 20-year-old. I'm not 20, but if I've got advice, then I'm more than happy to give it. If I've experienced something that you haven't, then listen to me. And if you don't want to listen to me, you'll learn your own way. But that's absolutely fine, because if you've experienced something that I haven't, I will more than happy listen to you, whether you're 12 or 112. It doesn't matter. Age is just a number. It matters on experience and what you've experienced compared to the next person that you can learn from.
I've heard great life advice from a 3-year-old recently.
Yeah, exactly. Yeah,
does not taste good. Great life advice.
Nice.
Don't eat dirt. It doesn't taste good.
Yeah, next time, don't eat a crayon. Finally, someone said it. Finally, someone, a trader, said it. Yeah, absolutely. Look, we're very much here to share our experience, and whether you're 17 or 70, it doesn't matter, because if you've experienced something, then you share your story on there. Now, if that's a different outcome to someone else, then that's absolutely fine, because we're here to converse about it. What I have experienced in my life could be completely different to what Richard has experienced or Victor has experienced. So if Richard was going to come over to Wales, I am going to give him advice on Wales. Now, if he's going to say to me, Will, you're younger than me, shut up, he's going to have a very tough time in Wales, and maybe not as tough as a time that I would have in South Africa if I decided not to listen to his advice. So it's all about...
Don't pet the lions. Don't pet the lions.
Shut up, Rich, you're younger than me. You don't have a clue, so I'm going to go pet the lions. So there we go, guys. You know, there's a perfect example right there of how age means absolutely nothing. It's about the experience in life. And on that fantastic bombshell, guys, I'm going to love you and leave you, and I shall see you tomorrow night. Thank you so much for joining. Victor, what is good, my man? Hope you are well. Sorry I can't have a conversation with you, but I can smell some fantastic food cooking, and I am starving. So peace out. I'm going to love you and leave you. See you all tomorrow.
Take care, William. You make me blush all the time.
Cheers, Will. It took him 5 minutes to say that the food is ready. I'm going to go and eat. 5 minutes. Enjoy the food, Will.
How is everyone doing? Hello, out there. Thank you for all those in the chat saying hello to us, specifically in this case to me. Rich, how are you doing today?
I'm doing good. I had a very let's call it annoying a week, the whole of last week, because I had no electricity.
Oh,
We had
that is annoying.
yeah, we had an electrical fault and somewhere in our area, and that just escalated and escalated and escalated and gotten to the point where we still don't have power, but at least now I have a backup generator that is generating some power. So I'm running my PC and my wife's PC, as well as the Wi-Fi, the fiber on on that, so I can at least work. But I
Wow.
haven't taken a trade since last week. It was a very annoying weekend. Not gonna lie. How about you?
And so basically, you're working on a secondary energy source. You on a generator.
Yes, right
Your
now.
personal.
That's why the lighting and everything is so weird. I've only got the ring light because that's connected to my computer. None of the lights are are on the grid at the moment. So what can you do?
How far from the bigger city are you located?
Not quite sure what you mean by that. The whole town itself, we're close to the central business district.
Okay.
And they themselves also don't have power. But we've got segments, and each segment has its own substation, and each substation has bombed out. So we've got 4 substations in our area that just decided not to work anymore.
I see. Well, I hope that gets fixed very soon, because that's indeed very difficult to work or trade or do anything without electricity. I mean, other than hiking and camping.
Yes, obviously. Like, physical activity is not a problem when it comes to not having electricity. No, my fridge and my freezer is absolutely empty. I had to throw away a bunch of stuff that was in my fridge and my freezer because it all spoiled. But it is what it is. It's one of those things. Yeah, back to medieval times. Light the candle, buddy. Yep. That's how it goes.
Well,
but I am here and I can work.
And actually, from not having electricity will make you appreciate electricity even more, right? Next time you have electricity, you spend your time maybe just a little bit more enthusiastic, because you have something you don't always have.
Yes and no. There's certain creature comforts that I really miss, like the ability to take a hot shower. That is a creature comfort that I really miss because my geyser is off. However, I've been swimming a lot more, so probably would not have been swimming all that much if the power was on, because I would be working. So yeah, it's a trade-off.
I suppose so. Yes, I think there's a lot of things to be done without electricity when you think about it. However, we've grown so accustomed to it. I mean, I can't really imagine. I mean, last time I was without power, something similar happened to the whole neighborhood. I'm not sure what happened, but something happened. We were out of electricity for, I don't know, half a day or so. I went jogging in the park. That's what I thought I could do in the time. Reading a book, going jogging, things like that. Since most, if not everything we do nowadays requires some kind of electricity, right? Some degree of electricity.
Yeah, very much so. But yeah, that
So,
is
Richard,
what it is. Yes, sir.
how is the we had a beautiful weekend with lots of happening, lots of statements, Canada, tariffs, post Davos, assimilation. Did you said you haven't traded since last week, so that already answers the question. I was going to ask you, what trades are you in? How did you what did you think of the opening today on EU, GU, or any other asset that you're trading?
So I had a little look on NAS, and I saw this nice, beautiful gap this morning, and I thought to myself, this is very interesting. This seems as though it probably might want to continue pushing lower. But then the follow-up was also just took back all of that momentum, and then we kind of got stuck here. So to me right now, I have zero expectation for NAS. Gold is a little bit different. Gold, I'm like, okay, we're very much sideways right now, and we're just waiting for New York to open up, or at least get a little bit closer to New York, so that we can have a reaction then. But I'm still quite bullish on gold, and I think most people are, even though I can see the potential of a bit of a pullback, and then just gathering up a little bit more buyers and then push higher. On EU, it was the same idea. We had the gap, but this gap was eventually filled, and since then we have been struggling to really pick a side. GU was very much me as well. We had the gap.
Closed it. Go ahead, but just I wanted to put in on EU. We haven't closed the gap completely, right? So that could be something for some people who might be interested in the actual close of the gap. Also on gold, the what you mentioned that we could, even though momentum, everyone is looking for gold to go even higher. There is that opening gap as well that would work as a magnet for people to to get in whenever we close that gap, because that's how it works, right? These gaps can be areas where the market then changes direction and go in the original direction of the break, or not a breakout, the gap, I mean, that it was open. So that's a very interesting trade for today.
It is a potential, but I would venture then to remember last week Monday's gap, which was just never filled. We didn't even remotely come close to it. So it could be that we could fill it, yes, very much so, but it could also not be today. It could be in weeks' time before we start filling it. But there is a bit of an imbalance over here. There is people that entered trades that just did not get the entry price that they were looking for. And it could be that they are looking for early exits, which could be somewhere over here as an example, to try and just lock up a little bit of profit before trying to push price a little bit lower to get in on a better price, a better trade, because they probably got slipped here quite severely, as an example. So yeah, I agree with you. There is a potential that it could start pulling back a little bit and then try and fill this gap down here. But to me, I would say I would still look for my base areas first and foremost, to see whether or not there is potential for those bases to be filled first. Because to me, you remember how I see the market, in the sense that it's that back and forth, and this was a back and forth area where bulls definitely took over. So if price were to come back down to that point, I would want to see whether or not it's going to have a similar or opposite reaction to the way that it had previously when it came to this area. But yeah, other than that, I have not been in a single trade. I'm actually looking for or I'm waiting, let's rather say, for NAS during the New York session, so I can potentially take a trade there. I did mark up something here which was in line with what I would normally be looking for, but we're not getting the reaction on the 5 minute that I really wanted. We're getting it on the 15 minute, but not on the 5. And the 5 minute had a little bit too much of a indecision trying to push higher in this area right here. So I would have wanted to see what I saw on the 15 more on the 5. So you have the beginning of a rally, you have a base, you have another rally, you have a base, you have another rally, and so on and so forth. I wanted to see that on the 5, but we didn't get that. We had this very drawn out base over here, and I just didn't like that. So
I understand that. Yeah, actually, it was someone in the chat also asking about BTC. Maybe we can take a look at BTC, not BBC, to put that into perspective. How the opening gap, which also happened on, well, actually it didn't happen because we have prices going all day, all weekend. But I mean, if you look from the perspective of Oanda's BTC price feed, you will see an opening gap. Maybe we can take a look at that as well. What do you say?
We can do that. I have Binance up here, so let's add BTC. Is it USDT?
Yes.
There we go.
Here's another one. Yeah, they're different ones. I mean, you have some. Go ahead.
So this is the daily chart on Bitcoin with the Owanda chart, and we definitely have a gap here. Can't see it all that well on the daily, but if we go down here, you can see it. Okay, you can see it very nicely on the 5 minute. That is quite the gap, which we've started to try and fill. How do you approach Bitcoin as a CFD? Considering that we have 24-hour trading, but Mondays you have, like in this case, you have with Owanda, you have weekends that you're not allowed to trade it. So you have the information that pops up on a Monday. How would you approach that?
Well, there's the gap, of course. You can see it as you are showing right now, but in the reality, there is no gap because the weekend, there is price, there is movement. So if you use the other price feed you had before, I think it was Coinbase, you can see that there wasn't a weekend gap because weekend is traded, traded 24/7. So I wouldn't trade something that is, the whole idea of the gap is that it skips a lot of price levels, and these price levels, they contain pending orders that were not traded, were not triggered, and that's something I think essential for the for the gap trading. And since you did have those during the weekend, then it wouldn't be as effective, my guess would be, to trade Bitcoin because of the gap. I did mention it because it is showing, and if you, but I wouldn't trade it I wouldn't use it. I wouldn't use it as a good candidate for gap trading.
Yeah, very, very. Yeah, that makes sense.
Because it has a logic behind it, and one of them being it shouldn't have been traded during those levels. Should actually be an actual gap, which in Bitcoin is not the case.
Yeah, so here I have both. I have both the Bitcoin Tether Binance one, and I have the Bitcoin USD 15-minute Owanda one. And you can clearly see the gap here. So this here is Friday. So if I were to draw a vertical line, this was the Friday close, was right there. And that's basically right here. And then you have all of this price movement through Sunday. So a bit of Saturday, bit of Sunday, and then you have the Monday open, which is all the way down over here. So you have all of this price action in this whole segment here that is just absolutely cut out during this gap.
So it's an artificial gap, meaning you don't want to be trading those.
Exactly. I agree 100% with you, Victor.
It's an artifact, meaning it's not actually there. It looks like there is a gap, but it isn't.
Yeah.
So you only want to be trading actual gaps, real ones, and that's not one. But still, it does give you an idea what happened through the weekend, and you can compare the gap in percentage terms against other assets and give you a sort of a relative strength or relative weakness, because you can measure that. The gap making is very clear to see. You can just measure the gap and understand, okay, what happened, because but if you used a price feed just as Owanda that closes the same time as EU or some other, like gold, then you can measure and make comparison between the gaps that you see on other pairs, and that can be indication of something, right? Relative strength, relative weakness, as I said.
Yeah,
it's more of an indication than an actual setup or possible setup.
And I think it's important to make sure that not only make sure that you have that you realize that there may be differences between certain brokers' information, but that even between TradingView and, for argument's sake, your trading terminal, there might be differences as well. So if I go on to the hourly, let's go to gold. On the hourly, there was a gap right here, even on the Fiverr's information. So the gap is there. So it's the same gap that you're seeing on TradingView is the same gap that you're seeing on the platform that we're trading with. So make sure that when you do your trading, that wherever you do your analysis, that chart is aligned with the terminal that you're going to be using, at least in terms of the data feed and the data that is being reflected.
Yes, for Forex, that's not an issue most of the time, right? The differences between price feeds from EU, from Oanda, compared to any other price feed is pipettes, usually if there is any differences. But these differences can be much larger when you're trading equity index, right?
Yes.
Because indices, basically the CFDs are a synthetic asset, meaning it's a derivative of the actual, but it may not be exact, right? Because they synthesize it through the futures market, a combination of those, and that will make it that you might see consistent differences between one price feed and the other, meaning S&P being 2 points higher all the time, and sometimes even more. And this can throw you off, because if you're working with limit orders, it's sometimes you need to be a bit more exact with your stops, with your entries, and with many points difference that could make or break a strategy. But on Forex, it's not. At least I haven't seen the differences being that large. But it's still great to not great. I mean, it's advisable that whatever you use for your analysis on TradingView be also as close as possible to the Fivers, the one that we trade, right? The best prop firm out there, right? And that
Well
is, and that's the reason I trade Oanda. I
Same.
use Oanda because it reflects, not all the time, not precisely, not perfectly, but compared to the other ones, that's the one that resembles the most, at least for EU and GU. Maybe for other pairs, you might be looking at other price feeds, but Oanda is a good safe bet to use for your analysis. Even though you're not going to be trading the same price feed, but it's going to be very, very close to on the Fivers.
Yeah. So I mean, this is an Oanda chart on gold. The price is currently 5,060. If I go to my Fivers terminal, the price is right now 5,059.7 ish, 5,056 ish, somewhere around there. It is playing around a little bit, but it's so close. So now it's already on 5,055. 5,054, 5,055. It's so close. So it's negligible almost, the difference between the two. So anyway, Victor, with
Yes.
that lovely conversation, my friend,
We get sad all the time this happens. We can
going to
hear it from a mile away.
my friend, we are having the greatest of times. But unfortunately, I cannot continue this greatest of times because our weather is A, picking up, and B, I'm still on the generator and I need to go and make sure that there's still enough fuel in the generator and I don't get caught off guard. So yes, I'm going to impart on you some well wishes, and I hope that everybody in chat enjoyed today's discussions. If you haven't already, drop us a like. If you haven't already, drop us a subscribe. We would really appreciate it if you guys can push us to 100k subscribers. We are celebrating our 10th anniversary this year. The Fivers is 10 years old. We would really love if we could have 100k subscribers as a birthday gift from the community. And in turn, we will provide all of you some very nice giveaways, potentially double giveaways, if we can have the 100k. That's it. That's my plug. That's what I have to plug.
That's a nice one. Indeed. I mean, 10 years in the industry. Not for nothing, we are the leaders, not only the pioneers, but also the leaders in the prop firm space. But Richard, I hear a generator calling your name.
Yes, you do. You most certainly do. All right. I'm going to love and leave you guys. Have a lovely day, Victor. You have yourself a lovely day as well. I will see you tomorrow. Cheers.
See you tomorrow. Bye-bye. I was going to ask Richard what is the fuel capacity of his generator, just to have an idea how low are we flying here. But I I better let him go so he gets to to actually filling the generator's fuel. All right, so let's take a look at the uh, Bajram asking for euro pound analysis. We'll certainly take a look at that. Many Tercio Tope being grateful for. Richard, yes, a special round of applause for Richard. Actually, for every one of those hosts on our show, because I think they're doing a great job in bringing real inside experience and knowledge to the audience. Let's take a look. So we have EU. I left all the structures that were broken on Friday at the last day of last week and the close, and we will come visit them. But let's take a look first on the higher time frames. Let's see. We have in the chat. All right. So we have on the higher time frame, we are retesting a fresh order block. We talk about this, we revisit this idea or this analysis all the time, but it's important to understand we are currently in a supply zone on the monthly time frame, and that supply zone is based off of a entry order block short, right? A bearish one based of a quasi that we have from before, from all the way from 2021. However, that doesn't mean you need to go short. Or someone in the chat asked, should we short EU? Well, this to begin with is a monthly time frame, so it may not be suitable for your intraday setups and things like that. But you understanding the monthly, of course, will give you a lot of advantage in understanding what's going to be happening. What direction will this week likely to be closing in? It can give you an idea. So we have the fresh order block on the monthly right there. That's the only thing basically that we need to be looking for. We reached target actually on last week. That was the target base of the daily order block. But before we go to the daily, let's look at the weekly. So the weekly time frame, we do have, normally with a fresh order block being retested bearish, you're looking for possible reversal patterns for this reaction, right? For this reaction going much lower. That would make sense on the monthly, right? As we can see here, but it needs to happen. It needs to be built up from the weekly, from the bottom up, right? You can't expect it to happen on the monthly, on the time frame they're looking, if you haven't, without showing first on the lower time frame. So one of the things you can not one of the things the thing you should be doing is going to the lower time frames and see if you can see those reversal patterns being printed, those transitioning going from bullish to bearish before you start building up your case for a short. And one of the things we can see on the weekly is that we haven't broken the structural low, right? Which this would be the neckline to indicate that we are starting a possible break of structure. This being the head, presumably the head of that possible reversal that we're not seeing, by the way. But I mean, just for transparency, this is how how you approach these identification of possible reversals, this being the head, the left shoulder, the neckline, and you can see that the neckline is nowhere near even being retested or being approached. Market is moving sharply in the opposite direction of that trend line that would that neckline that would break the structure, meaning the market is not positioning itself for that reversal that we expect on the monthly, at least not yet. That can change in the future, but so far it's not happening, and that's what we should be following or should be listening in. So we have the weekly not supporting any reversal so far yet. That means that basically the monthly supply zone should be put in the freezer for a later time when maybe we have such alignment, but that's not the case right now. So do we have anything to trade for the weekly? We left an order block below here. It may or may not be something we might be trading in the future, but it's good idea to mark it as a potential target, not target, I mean area we could be looking afterwards, right? In a couple of weeks, we could be trading this as a bullish order block that is fresh. Yes, my friend, we'll check EU yen for sure. And so that's the weekly, right? And let's take a look at the monthly, or the daily, I mean, and the daily time frame. We have a couple of things here, right? I was talking about this. We were talking about this for some time now. We have two reversal patterns that were at play. One is the bullish one, which since the market was reacting from a fresh, or not a fresh, but an entry order block on the quasi, we talked about this here, where you have the quasi being created. The first one had a initial reaction, but it wasn't until the second one was retested that we got this beautiful reaction. And the TP is based exactly on that. TP was hit on Friday, as we mentioned. That was a beautiful setup if you got to catch that move. Obviously, the area to be getting in is within these two candles, are actually the second one, and if not, the break of the high of the first one, right? So not the first one, the high of the break, the high of the break of the high, I mean, of that second candle of that bullish order block that was created. That was one thing. The other one was the bearish order block, or quasi, I mean, that we saw before. We had the established uptrend, break of that, a neckline right here that created the quasi, and we had initial reaction, and eventually the beautiful reaction here, even though it didn't trigger me personally, but a beautiful reaction from that order block and going into the opposing order block, or the entry order block, right? So a bearish order block putting price moving towards the bullish one. Beautiful. You can see how these two patterns happening at the same time, right? They're simultaneously, but one being active and then pushing towards the second one, both of them being at play, and only one of them obviously can have success. And we can already see by the break of this order block, we had the close on Friday, that the bearish reversal has been taken out, and that's why we started this whole quasi we had before has been the whole pattern has been rendered toothless. Why do I say that? Because this is the only entry order block we see right here for that whole pattern. It can reverse from higher levels, right, before the head, or even after squeezing the head. But there are no entry order blocks to the left, right? From this point to that point, this is the last, was the only one, but the last one, and that last one has been invalidated, meaning we don't have any. That's a sign that the reversal is not happening. It's failing, meaning the chances that the market will continue to go, meaning not reversing, have changed dramatically, right? Before we had this, we hit this level, we still had a reasonable chance of price reversing from that order block and perhaps going to that lower swing point, and perhaps even to the structures be much lower, right? Next structure will be that entry order block, and eventually the weekly below us. But now that we broke this entry order block short, the market has given us, it's kind of like shown us its hand, like you're in a poker game and you kind of see a glimpse through the reflection of the sunglasses the opponent is wearing, and you kind of see a card, or maybe the whole hand, before the game is over. You have like a little cue, little indication, what its intention is going to be. When is it going to, bluff or not? Is it a bluff or not? And so that close to me is something that's similar. Maybe not as clear as knowing your opponent's hand, but in any case, it's intention, right? The close above that order block tells me that the market is, positioning, is trying, and is succeeding in breaking out and continue. That reversal from the left is fading. That's what it says. So basically, we need to move this away. We already hit target, which was a beautiful target to be hit. But that's it. Let me take a look. Yes, let me put that line back, because this line was also important for Friday. But you can see that we closed above it on Friday, and we, so far, at least, we have never looked back. All of this can change on a dime, right? Because we have on this week, we have some interesting news coming out. We have, let me show you guys on the screen. Let me share this tab. There you go. You have we have on Wednesday we have the Bank of Canada, but of course that's not the one that I was gonna show you. It's the interest rate decision from the Fed on Wednesday, and later on we have unemployment claims as well. Especially the interest rate, that can be something that could change the market, drastically. And even the fact that we see the intention now of the market breaking the reversal pattern, right? The bearish reversal, meaning, very bullish sign. All of that can change on a dime this week if the interest rate decision is not well received. At least if it is bullish for a dollar, then that would be, of course, can change this technical, view or technical outlook drastically. All right, so that's one thing we want to be looking at on Wednesday. Do we feel? Do we had a break? This is basically a break and retest. When we come back, whatever happens on Wednesday, when we come back, do we hold this level or not? That could be the first indication that the market is going to hold and continue to go. Even if we break it, doesn't mean the whole reversal is back at play. I don't think it is, because this is already the invalidation of the pattern that's irreversible, right? That's done. It's invalidated, forever. So in the only way we can have a reversal pattern at play again is that we form a new one, right? So that could be in the future, but right now the patterns we see from the left, those are gone, meaning that even if it goes lower, I would see that still as an invitation for a buyer. The structure has broken for the buyers, has broken open for the buyers. It's an open invitation for buyer structures to be looking for a long, basically, on a swing trade context. So let's take a look at, that's the daily. So currently I don't have a position, right? The long position was, the long setup was from the quasi. And if we come back maybe to some fresh order block we have below, that could be something. And on the lower time frames, you could see yourself taking a long from the break and retest, right? That level, that area that we just broke, we could easily see price coming back into it, even squeezing it a little bit. And then if we do get that reversal again, bullish on a lower time frame, maybe on the hourly, maybe on the H4, that could be a great place to be getting in for that continuation move to higher levels. So that's EU. The macro target is this level, but that is based on, that you see here is based on this quasi. So even though I think it's a great level, this is the reversal where this macro target is based on. So basically, we cannot use it because of the quasi, because it hasn't used an order block that is part of the quasi. But I think you can still use it, not because of the quasi, but because that's the last swing high that we have from current level, right? If you look at the current price and you look left, there isn't any specific level anymore to be had than this swing high, which stands at, what is it, 1.19188. So that's the logical level to be targeting for the next. Once you have an entry, and that could be the break and retest, as I mentioned, or maybe the order block below, right? Because all of these has been taken out, right? Those were bearish structures. This one as well. The levels that we should be looking for is the break and retest, and maybe this bullish daily that we have below, for the market for us to get back as a swing trader into a long EU. And then the level, the logical target would be that swing high, at least, because that's what the market is going to be retesting most likely. All right. let's take a look at the lower time frame. Do we have in a trade or something that could be seen as a trade? Right, all of these levels have been crushed. I left them so you guys can see the reversal pattern we had first here, right? From the daily, we created reversal patterns, and if the market was going to be it was going to have a reversal, these are the levels that it most likely would use. And it did have a very nice reaction from one, at least the first time we got into it. See that? That's a beautiful reaction. About what is this? This is about almost 100 pips from the time it first revisit this order block, and it reversed back into a bullish order flow. So, but the second time around, you can see clearly that the market had no issue at all breaking and continue from that level. So those areas has been taken out, and we should move them away just like that, so we can see the chart, see the idea, and the levels that are important. See this one as well. You can see how the market taps into it. Beautiful H4 order block, moves away before continuing. That's a beautiful reaction. We see them all the time. That's why I trade order blocks. So, but on the H4, we have the opening gap, which has been almost closed now. Let's see the difference. Very little. That is, what is that? Like a pip. For all sense and purpose, that could be considered close, since it's just a pip. But I don't see any bullish structure being created fresh that we can trade. At least I don't trade like that. I would want to wait for price to come back to some structure that they left behind within 10 bars or less, and then get my entry long. Who knows? Maybe with Wednesday's news, that could be something we could be looking at, or maybe some future order blocks that could be created. Maybe this candle could be created could create an engulfing an outside bar. That would be a great place to come back later, maybe the day after, or maybe 2 days after, for that possible follow through movement or continuation move. All right, so that's EU. I don't see any trades here. Nothing here currently to be using. I'm quite picky with my entry, so that's why I simply don't touch the market if I don't see anything through the order blocks. Let's take a look at the let's take a look. Trading view chart faster in paid version? I don't think so. You get more features. You can check them out at the trading view, like more flexibility in I think time frames and different chart patterns, chart types, and also I think you get more history, especially on the lower time frames. May or may not be important to you, but I believe, or maybe there is. Yes, I think there are more ticks more often. So the price feed is a little bit more granular on the paid version than on the free version, but for most people, I think it's just fine. I don't think you'll see any differences. Okay, let's take a look. All right, so let's take a look at what was it? Euro pound. Don't forget, guys, we have Discord community having a workshop today in about what is it? 2 hours from now or so, I think. Yes, 2 hours from now, we'll be having a workshop, and all of you are invited to ask us questions, to share your experience. Maybe you had a payout, maybe you want to celebrate it. It's not about flexing; it's about celebrating with other people who will appreciate, and perhaps give you and if it may not be a payout, maybe it's maybe you failed an account, and that's okay. This is real trading, right? So we lose accounts, traders in as as anywhere, right? So as a Discord community, you will see all of that, and you're all invited to come and share your experience trading with us here at the Fivers. Euro pound, looking from the higher time frames, you have nothing on the monthly. I'm gonna try to do this as quick as possible. All right, so we have a 1 monthly order block here. That's something for later. Other than that, nothing to worry about. We took out this swing high. Okay, weekly. We did have a possible reversal pattern here at play. Does it have the likings of? Not really. There are no entry order blocks, so basically there's no way for me to trade this reversal. But there is a possible reversal at play here. But there are, as you can see, this is the reversal, right? There are nothing here between the head and the lowest point so far. Nothing to trade this reversal. Going to the daily. Let's take a look. All right, so we do have a. This is not a left shoulder, but this is. All right, so let's mark it. That's the daily. This is not a left shoulder, but this is. I know it sounds weird, but trust me, that's this is the pattern, right? So there, right? So not this one, that one, doesn't really matter. They're very close to each other. The market, the pattern is expanded, and we can mark from the head to this one if we can catch something. That's on the daily time frame. So let me take this out. Do we have patterns? Do we have nothing here? We only have this one, and actually we have this one as well. There. This is for the daily bearish. So that could be something we look for when the market comes back. You could be looking for a possible reversal from that, for at least going to this level, or maybe something in between. Shouldn't say at least. That would be the ultimate target. Something like this would make sense to me. We'll have to wait for the market to do that. But in the meantime, on the daily, we have on both sides the market coming back into some support. Actually, all of this is expanded, right? So we're talking about 4, 6, 8, 10. So basically, I'm not going to be using that. And this would be 4, 8. Yeah, I'm not going to be using that either. There. That's the area that I'm going to be using for the bullish reaction, possible reaction long. That's the daily order block right there. So that's the demand zone. Actually, this is a little bit higher. And you can then build your case. So basically what you have on the daily time frames, you have reasons to expect price to react this way from that structure above. Oops. I mean, this, right? And you have reasons to believe the market to be having some kind of a reaction like so, right? So something like this. Doesn't have to be that's going to continue all the way. Neither this going to continue all the way, but just a reaction, at least a reaction, a day or two, maybe a few days, and that's at least, right? It can go long, it can go much longer, but that's not necessarily even needed if you get into these levels. So what you're looking for is actually we already had the we already had the target being hit. That would be the target for if you had a long from this position, that would be the target, and it already hit target. Look at that, came very close to it, and so far it looks to have had a reaction. So I'm not too keen on using that target anymore. So let's look at the possible, since we are at the bullish the demand zone. I would want to look for longs from this area. And do we see anything popping up on the H4? Let's take a look. Thank you guys for all these messages. I'm certainly going to be going through the chat and doing my best to answer them, talk about them. But I really appreciate them. All the effort you guys put in the questions, the comments, and so on. Let's see. So on the H4, I don't have a reason currently here, but if we look to the left, do we have a quasi? We don't have a quasi either. Nope, we don't. So there is no quasi in here, and even if we conclude this, there are no quasis. And if we okay, so there is, yeah, I can't use this because that's the maybe there's a, the high here is 45.9 and here it is 45.8. So basically there's no quasi. Not even if I consider this to be the head, that could not be a quasi. So basically the market is not showing signs of not the pattern of a reversal, meaning you know, that tells me that the market, you know, might be interested in going lower because, you know, normally you want to be seeing the reversal patterns either here or including the whole structure, the whole complex, the market telling us that it wants to go up, but it's not creating those. So that makes the assumption that maybe the market is going to continue lower. That idea is a little bit more likely. On the H4, I can't find a reason to go long. I do have a bearish order block there. So that makes me look for a possible short, which I do have an area here. It's not a lot. And the fact that it's on top of the daily demand zone doesn't make it a great area to be shorting from. However, what's the ATR? 39. How many are we? What's the range? 31. So basically, we could expect something like this for today to the low of the. Okay, so that makes sense. That does make sense. Basically, that could be the target or something close to this swing low, right? In terms of the in terms of the move, right? And it makes sense after hitting the daily order block here. It's using an H4. It's not aligned, but it is still in the same direction. So that makes it useful. I would say useful. Okay, so we have a small area here with some overlap that we can use. There. That's the overlap that I'm looking for. And let's go to the 1 hour to see if we are having, if we can see the reversal. That's mixed signals. That's because of the demand zone below. I would say, all right. So if there is a reversal, then I would assume that this area, right after we hit this area, we could be looking for that pattern. And in the degree that pattern succeeds, we could be going short into the target we set below here, that level, or at least something close to that level. Let's see on the 5 minute, we don't have a quasi yet, but let's go to the lower time frames. Maybe here we do. All right, so I'll be targeting. Actually, this is safer to take as the neckline. The neckline is actually here, but this is much visible for everyone. And do we have a level here? Yes, so to me, this is the place that I would want to get short from. However, it needs to be very quick. Okay, so this is much better. Yeah, let me change this. This would be much better. A better area to go short from. You have the neckline, left shoulder head, breaks the neckline, and I would, looking for that short based off the H4, H1 overlap, which is this line, this area here, right? This area, that's the area of interest. And after we reached it, which we did here, we can expect some kind of a retrace and then the final push lower. Doesn't always happen, but that is how I would I would trade it, right? Meaning, let's mark this, let's put an alert on it, and I can alert you guys when it comes back, and maybe we can consider a short from that level. And the target, this is the ultimate target, right? That level, holding it for the rest of the day. However, that could be a nice target as well. That's the H1. And I would just target there, the upper border of that target. So that would be this would be TP2, and this could be TP1. And since we already have a swing point that is close by, we could just target that level. So that would be TP1, right? But only if, and you can, instead of putting it at that swing point, you can put it something in front of it, maybe on the 15-minute, maybe on, yeah, I would put it a little bit above that, something like that. All right, that would be the ideas if we have a reversal, a continuation from this push, right? You have this push. Let me mark it as such. We have a push. It comes back into the daily order block and it moves away and touches the bearish daily here as it goes deeper for the rest of the day, presumably, right? That could be something, a nice area to be trading. That's through the, applying the strategy that I use all the time, using quasis and order blocks. Very, very simple. Let's take a look. No problem, my friend. No problem at all. That's what we are here for. Breaking down the market, and let's take a look. Nico Nexus, how are you doing, my friend? I'm facing an issue while trading because I've learned some different types of concept, SMC, ICT, breakouts, liquidity setups. I cannot take trades of fearing of something might happen. I understand that. I do understand that, Nico. The thing is, even while one strategy, one trader could be looking for that long, there could be valid reasons for a opposite trade. And that doesn't mean that one strategy is wrong or one trader is better. It might be just because they're looking at different time frames, they're looking for different patterns, and any given time there's a reason, there's arguments on both sides to go long and short. And both of them, most of the time both of them can be right? They can have different targets, meaning you could be expecting, let's say you could be expecting this trade, as I'm indicating, this trade to go short, but maybe another trader is looking for this sweep, the sweep of this high before going short. And even though one is going long and the other one is going short, both of them can be right. Even this is the case where they have the same target, but they don't even have to have the same target. So, my advice to you is to pick one concept and stick to it. It's going to be very difficult for you to marry and include, all the different concepts you've been learning into a system, because they will be giving conflicting indication, go long here while the other one says go short or don't do anything. Which one do we follow? First thing, the best thing is to measure your performances on all the different concepts that you have been learning about, and pick the one that speaks most to you, right? That is closer to how you view the market, and that view can change with time. But right now, which one resonates the most with you? And build your case, build your stats, collect your data on that particular concept, and see if you can make it work. That's all. You don't have to master all the concepts out there. Just one to gain consistency and gain profitability. That's it. You can expand later on, putting more tools or expanding your views on the market and your setups and your trade book and all of that. But you only need one simple setup that you build your skills around. That's it. So I would argue to focus on specializing on one thing, and then try not to be the jack of all trades, a generalist, but be a specialist on one type. Hopefully that helps. Nico, we have let me take a look. Someone wants us to take a look at euro yen. Famis Olanki, how are you doing, Famis? Let's take a look. And the market is moving quite nicely from this level, even though it didn't get into the area, right? I only get in when the market actually in the lower time frame comes back and gives me these tight areas. But still, the quasi, it already is indicating break of structure. And sometimes it does not come back to retest that area, but goes right away to the direction, or maybe later on that would happen. We'll see. We'll have to see. Let's take a look at euro yen on the higher time frames. Nothing here to see, nothing to trade. I'm gonna mark this as good practice, but there's nothing here for us on the monthly. The weekly, we are already squeezing and breaking down on this weekly order block that is fresh. That would be below this level. You'll see buying pressure. I mean, above this level and below, you'll see selling pressure coming in. That's exactly, so you want to be short below and you want to be long above that level. That's a general principle you would be seeing. Since this is the weekly time frame, that you're going to be seeing the rest of the week. As soon as we break on the other side, you will see buying appetite coming in and pushing price much higher. At least that's the general idea. That's what the market is reading. Other than that, we have actually, you guys see that bearish outside bar? 2 candles creating 2 order blocks in opposite direction. How is that? Okay, so that's not actually true. This is not a outside bar. Let's take a look. Okay, so that's the weekly. We do have a nice quasi right here. Leaving 1 entry order block for the daily. Okay. What else? That's it for us, right? So we can use an alert there. Okay, just to be alerted when we get back, if and when we get back. And we have on the 4-hour a quasi as well, right? It's a bit huge for a it's the same as the daily. So, it's basically using the same daily. Let me just leave that daily. Maybe, okay, I'm gonna put it like that. Okay, and take this out. Great. So you have a daily and an H4, and there we have a couple of structures here, which we could be looking for reversals when we get there. Since that is a yes, that is definitely a entry order block as well, regardless of how other price feeds are. Okay, so this is the areas you want to be looking for. That means we want the alert to be there. Okay, that's enough for now. But so far, I don't see, the market isn't switching back. It's still in that bearish order flow. You can see clearly how the market is, the seller side is dominant, and even after taking that low, be close below it, and there was not even a little pop, which you would expect price to do after the seller reached their their intended target, short-term target, which is taking out that swing low. They are still in, at least so far as we can see, they're still in control. So we'll have to wait for these to get triggered. In the meantime, I think it's let's see the daily H4, the daily range 230. Wow, that is way above the ATR. On the left lower corner, you can see the ATR reads at 128, and we just measure 230.6, meaning we are, what is that? That is like, that's like 180% almost the ATR, meaning we shouldn't expect price to go much lower today, right? That doesn't mean it needs to go up either. It can still just keep, slowly going out until the end of the day, which would not be that far. And so I think the move for today, the momentum for the move for today already happened, as the market has already stretched and pushed the range of today and reached target basically. Okay, so this level, the broken level is the one that you want to be watching for the market for reversal. You can see how the market goes back, right? That's the structural level. You can see how the market reacts beautifully to it, right? Comes back, squeezes a little bit, this looks more like a sweep, takes a little bit and goes the opposite direction on the lower time frame, but eventually it holds, it breaks, comes back, holds, but only to come back, and now is retesting it from below, meaning this is here was a support, broke down, it's still a support, and then it starts switching. That now it's resistance and resistance again, meaning the market is basically, what you're seeing is the market went through it and is now likely to be heading lower, right? That's what it's looking still very bearish, even though it's very stretched. That's why you shouldn't just go long these very expanded assets, because it doesn't mean it necessarily going to change direction. I mean, this move can continue tomorrow, and you'd be in a lot of pain if you just long it because it's too stretched. You have to wait for the reversal to happen. And actually, I don't see a reason for the reversal. I don't see the market. All right, so we have a little order block here, but it's quite wide. So if you want to do a counter trade, I wouldn't go into that. So the momentum is the opposite. So you want to be very picky of these moments. There is a little order block here that could be used for a possible reversal. Not a big reversal because you don't have H1, you don't have H4. I wouldn't be trading this because it doesn't have that alignment. But if you're you're looking for that possible pop coming out of a very stretched market, then you could see that happening when the market does reacts to the quasi, right? We have this would be the quasi, and if not, you could have the quasi right here, but it doesn't change the analysis. You'd have the left shoulder neckline, the head breaks the neckline, and then comes back for a possible reversal off of these levels. But be aware, the momentum is to the downside still, so it's not very convincing that it wants to go much higher. We'll see. Because of the expansion, I can totally see this pop perhaps to, maybe this is a little bit too much to ask, but certainly a bit above this line is likely. If it can form that reversal, taking this high would be the first level, but eventually perhaps something in that level, in that area. Let me see here on the perhaps an intermediate. I don't see anything, so I don't have anything else besides these swing highs for possible targets. So it's still a nice place, and it fits the idea, right? You don't want to be going this is a counter trend, right? Counter to the momentum. You don't want to be targeting anything much higher because the market doesn't necessarily want to or need to go that high. Even that could be an idea, something like that. If it reacts, and then you can target this swing high or the corresponding bearish structure that was created. Something like that makes sense. But the better trade is when price comes back, if it does come back within the H4. All right. Hopefully that helps. All right, intraday trades has a question. Vic, can I have your opinion? Yes, you may. Let's take a look at, is it EU? No, it's gold. Don't forget, everyone, let's check how many likes we have. We have 136. I think we can do better. What do you guys say? We go for, I don't know, 200 seems a lot today, or isn't it? Normally, last week we were hitting 200s, easily. What's happening? What's happening, guys? Gold. Let's take a look at gold. All right. Gold has been the talk of the town. Gold has been, with all the geopolitical pressures and happening, for lack of a better word, gold has been very, very booming. I mean, for some time already. The monthly doesn't give us any trading opportunity in my mind. Let's take a look. No problem at all. Nibedita Haloy, no problem to you. Let's take a look. All right, so in the weekly, there isn't anything, right? Anything to trade. These, let's go to the lower time frames as well. Market has been almost, like a space shuttle going straight to the moon or to the sky. Nothing here, in my opinion, to trade. I mean, the market is 4, 5. It's rapidly. It's not thinkable. It's not very thinkable that price will come back anytime soon. So this order block not likely to be retested within the minimum amount of time. So what are we left with is this structure, right? We have on the H4, a bullish H4. And there was a question actually, that was why we're looking at this. On the OB on gold, it is on the 45-minute time frame, open at 12:30. Let's take a look. All right. 45 second. That was a 45-minute. That's why. Okay, so the UTC, so let me, that would be Okay. So that would be 2 hours from 2 hours in the past. So that means 1:30 or 1300. Basically this one, that one. Okay, understand that. Actually, yes. So this is the order block that our friend is talking about, intraday trades. Is that a valid order block, even what happened before that OB? Well, you have to. This is the 45-minute, and there's nothing wrong with using the 45-minute time frame for, marking your order blocks and using them for your trades. But one thing, even before I look at possible reasons for invalidation, is to look for something that would be stronger, bigger than the 45 minutes. So before I start assessing the relevance of any structure, I need to see, what are the higher time frames telling me? Are they building a case long, and this smaller time frame, the one that I'm looking at, is going short? Do I have conflicting? Do I have a higher time frame support or not for my case? So let's take a look. We were on the H4, and we do have a supply area here, right? That was a 45-minute. So let me mark that as, it's not like so. Okay, so we do have a H4. That tells us that the market would be, the idea is to look for this as a demand zone for price to push back from. So you could be looking at H2, H1, 45 minutes as well, or any time frames lower, and looking for alignment in the same direction, right? That's a valid trade, right? It's also in the direction of the gap we talked about before with Richard Butler. We talked about the gap here, the opening gap, the weekend gap, and the gap tells something, right? It tells us that the market there's imbalance, right? At the beginning of that trade, the market gap, and that's why the reason it gapped so much, right? And as long as the market momentum is still present, that's a good bet to go into the direction of the gap, because that's the imbalance. That's what the market is telling you. The buyers are so empowered that they have to gap up, and that's why we have such a clean move up, right? Such a huge candle, opening candle. So that's great. But at the same time, the moment this structure breaks, that could be your reason. Whenever it breaks, that could be the reason for you to short that, that reversal, meaning the market has exaggerated the move and is now coming back to some area of support. And one of the areas it's going to be looking for is exactly that gap. Not always. You can see that we mentioned that before as well, that it doesn't always come back to these opening gaps. Let me take a look. So that's one thing that I'm thinking of. So we have a bullish structure, which, if broken, will be, right away will become a supply zone, somewhere you want to be selling from instead of buying. So this is the H2, nothing here. It forms a little 2-hour order block there, bearish. And on the one, let's take a look. Okay, so we see this is the 1 hour. Do we have an outside bar here? There was the low is 78.26 and 78.86. So there is no outside bar. There isn't really anything here on the H1, just an H2. And I could use that as alignment for that 45. Yes, I can. But I'm afraid, not afraid, but I mean, figuratively speaking, the demand zone that is created by the H4, that could be a reason to be careful about using the 45-minute right here, because you're going against the direction of an H4. If I'm going to be shorting this, the 45, I only want to be trading it towards the H4. Right, that's it. Because you don't want to be betting that an H45, I mean, a 45-minute is going to take out the H4 order block. That does not make sense, right? A lower time frame breaking a higher time frame demand zone. That's unlikely. Or if you check that, if you have a lot of similar situations, you will see that that doesn't happen that often. Even though this one does have an H2, but still H2 against H4, simple terms, the H4 should win more often. So that's a little bit of the issue that I have with going short the 45, but I would be going short until this level, and then I will start actively managing it, meaning if it just continues to go lower, I can leave it. But the moment I see that it starts breaking structure, right, breaking that and creating possible reversal pattern, you want to be out of that trade, because likely it can easily break and continue higher, make you lose that trade. So that would be something, but still tradable, certainly still tradable. Let's take a look at H1. Don't see anything. We already discussed that, the 45-minute. But a question you had was, is it valid? Yes, it is valid. This 45-minute order block is valid to be traded. However, it is against the momentum, right? You have a opening gap, a bullish opening gap, and ensuing you had a impulsive move to the upside, and you are now basically in consolidation, presumably to eventually continue, right? That's the logical direction we should be thinking, right? Until we break the structure. Since that hasn't happened, the still default direction to be expected, you could be looking at the daily range to assess whether or not it is likely. So you have a 107. Okay, I do get the point that it is stretched. It is stretched over 100%. So yes, I can see the market pulling back, before it continues. Maybe it will continue today, but because of the ATR, I can totally see the market, needing to go back a little bit, or even staying here within the range, and then perhaps later tomorrow continue higher, right? I totally get that. However, price action is king. If the price action, even though it is extended, even though it is over 100% the ATR, if price action is indicating it's still creating bullish structures and it is breaking bearish structures, it can still continue to go, right? The market can continue to push and stretch, even though it doesn't look likely. Price action is the beating heart of the market. If it's showing you that, that's what you should be looking for. Expect from the market to do. So, I would say, let's go to lower time frame and see if it is breaking, right? Taking a short from here is not a high probability trade to me, because of what I mentioned. The structure is still bullish, right? Couldn't take out this level, and it should have, right? There's no way it's going to break and go to lower level without taking this out. So you first want to see this broken before you start thinking of taking this low to go lower, right? I know it looks kind of weird, but you want the market to break structures and then start looking for an entry. So I wouldn't be too eager to go short this, especially this is an H4. It's coming from an H4 order block. My expectation is, this is likely to happen, because this is 45-minute, even though there's an H2, but still, I mean, H4 still trumps both of them. So that's my idea. You can still look for quasis and catch a great short from there. Let's see. But my initial idea would be not to short this. Let's take a look. Okay, so there is a... Yeah, but it does not make sense to go against that H4. I'll be honest with you. I wouldn't want to, I don't think that's recommendable. You could... 1, 2. All right, so there are... Okay, so if you're very, very picky, I can see myself taking a short from here, but really, what are the alignments here? You only have a 5-minute quasi. What else? You have an H2, which is being retested. Let's check that. Yes, you have an H2 that's being retested. All right, okay, so you got a point. But still, when you look at the H4, the plan, yeah. No, I'm not gonna. I don't want to be. I don't want to be. I don't want to be shorting. Market that is retesting this H4. I had to be very, very careful with that area and that area. As long as those hold, I can see myself, but it's still a low probability trade. I'd rather go with the direction of the H4. All right. Hopefully that helps you somewhat in your ideas. Okay. Dollar cat. HB. How are you doing, my friend? Okay. HB wanting us to look at USD CAD. All right. So we have a possible, we have been talking about this. You have a fresh order block on the monthly. You have a weekly that was retested here, there, but it did have a reaction, but it didn't have the reaction that I was looking for. So to me, it would still be waiting for the signal. I mean, waiting for the weekly to tell us. And so far, it hasn't told us. So as long as it doesn't give us this sign on the weekly, we have to wait for either it shows it or it breaks the structure and doesn't show anything, right? So I don't have anything yet on the... All right, so this is likely. Okay, this is beautiful. Look at that quasi. Maybe that's why HB is wanting us to look at this. This is that quasi, that reversal pattern. Where does it come to? Beautiful, the entry order block. So the weekly hasn't given us anything yet, but the daily is setting up, meaning you want to be looking for this area for a reversal starting from this area, this order block. And we have a first reaction. So we have to wait for today's close and tomorrow's close. But in between, you can already start taking some trades, right? Even though the daily hasn't signaled yet, the weekly hasn't signaled yet, you can start getting in because, you could get in at a early level, hold the trade for the rest of the day, or maybe for a little overnight trade. And by the time, you're ready to get out, maybe by then the daily signals. If the daily signals then in, let's say, a day or two from now, and you're already in on the lower time frames. That's how you take a intraday or even an overnight trade and get a huge move out of it, which seems almost impossible to catch or to know where it's going to turn. You don't actually know that it is going to turn, but you start taking advances on that possible move on a valid trade. You don't take it without an intraday valid setup. You have to take a valid setup on the intraday level, and then you hold that without knowing for sure if the daily and the weekly will signal, but you hold them, and hopefully the validity of the trade, the intraday trade, and the signal, they will overlap the daily signal, and then you can upgrade at least part of the trade for a daily target as well. And we talked about this before. The daily target would be this would be the monthly target. Let me take a look. Yeah, this would be the monthly target, but the weekly would be here, depending if it signals or not. If it does signal, so this would be the weekly target, But if it does signal, you can then target the high of this swing high on the weekly time frame. I don't think I have it. I have a template for weekly target, but this would be if it does signal, then you can target this. If not, then only the swing high. And on the daily time frame, this would also be the daily target. Okay, so let's target only if it signals here. We don't have that yet. So that would be the daily. Let's take a look. H4, we have a fresh order block, so that's where you want to be waiting for price to come back to give you a entry signal. Do we have a quasi on the 1 minute to go with that H4? No, I don't think we have. Nope. No. Okay, so we don't have an H1 reason. No H2 for sure. So it's too early to say anything. We'll have to wait for the market to get to the order block and perhaps then create a H1, and then we could take it fresh, perhaps a move. But that would be something that I'm looking for. Taking a long, not right now, not with the current market structure, a long from this level, and then targeting H1 structure, H2, H4, etc. But we'll have to wait for market to get back to this level, and then we can start looking for possible H1 reversals. Right, that would be the head. This will be the neckline. This is all, preparation for the possible reversal. And how are we doing on the likes? You guys hit 200 already? I'm gonna check in the background, see how you guys are doing. 148. Not bad, but I'm sure you guys can do better. Let's try to hit 175 before the end of this stream. We have 20 minutes, actually a little less than 20 minutes. I'm sure you can. It's a fair target. What do you guys say? So these are the areas. I know it's not. We shouldn't be looking at the 5 minute. Okay, let's wait for the H1 to be printed, and then we can start looking for possible order blocks from this area, and then that little area, or maybe on the 15 minute as well. We can look at that. You can see that on the 15 as well. So maybe you should use the 15 minute, right? But let's wait for the H1 to signal first. It hasn't done that yet. There's no structural break here on the. To me, this is not the left shoulder. That's not the neckline. To me, it isn't. So let's wait for the market to actually print the right candles, the right pattern, the right alignment, and then you start looking for the entry on the minute. So this is something we want to be, watching closely, but not trade yet. Okay, someone is asking about the Kiwi. It's Vinny. Vinny is asking about Kiwi dollar. All right, let's take a look at Kiwi dollar. Wow, look at that. Okay, so on the higher time frames, we have, what do we have? We have a fresh order block here on the monthly, but is it visible on the other? It is. It is. Okay, so it is visible. Let me clean this up from previous patterns. Beautiful reaction we had there. We had an outside bar. Look at how price comes back into that outside bar and moves away. On the monthly time frame, beautiful. Okay, we do have a fresh order block here, but since the other one is still fresh and it's already reached it, I would rather use that one. That's the monthly. The weekly quasi here, let's take a look. We have okay, so this is the neckline. And the market already came back. I know it's a wide structure, but it is what it is. There you can see the market switching back to bullish. That's on the weekly. And the weekly also has a bearish quasi in here, and that makes this the... Okay, so there is a huge area here. Not very useful at all. There's also a bearish quasi. So on both sides you have the market. That's not very helpful when the market does that, but you can trade both of them. So you go long, and if it's later on later it signals, you go short as well. So all right, so you have a weekly structure on both sides. Okay, since we are coming from going there, yeah, both of them are valid. They're completely valid. For don't like when it's wider than the monthly, but that's the same case below as well. So you have like a level there. Okay, so that's the daily. We had the daily order block for the long. Look at that. And actually, it's a very nice one. Okay, so we have dollar cat. Let's take a look at dollar cat. Let's come back to this. What's the... Okay, so that's the level. Okay, but the 1 hour hasn't changed yet, so there's nothing here for us to... We have to look at let me delete that alert. I'm not sure you guys can hear it. I don't think you can hear it. Okay, so let's go back to Kiwi. There. That's a beautiful quasi. This one. And the target on that one is the high of the structure, which is this. Right? Going short? I wouldn't be going short this, because you have a reversal, a confirmed reversal, this being the quasi, and then it reacts off of this, off of the order block, and continues like a rocket. That's what you want to see when you have a pattern. When you have a quasi in play, it's quite fair to expect it be hitting some decent levels, and that area is a good one to be expected to be hit shortly. On the bearish side, which perhaps is the reason why you think let me mark this. Okay, let's see. So we have this would be on the daily, this would be the daily quasi short. Okay, there is a level here. So that's one. And there's another one up here. Okay, so I can see myself go short from these levels, and they're actually entry order block on the quasi. It's tricky because you have a bullish quasi at play, and that's a reason to expect price to hit that TP up here, and that would automatically mean that the market is not going to respect this order block, even though it's an entry order block. So what I would I can see myself shorting this, but I mean it needs to have complete perfect alignment H4 H1 on the minute, and then I don't care if it takes me out, because if it reverses from this level, there isn't any bullish structures to stop price. So you could easily see it go something like this before it then decides whether it wants to go up or down. And that's a lot of a reaction to have had. Even if eventually the market goes up and hit perhaps this, completing the pattern, the bullish pattern, in between, you can still catch shorts. I can see this happening, yes. So let's go to the H4. Do we have reasons? We don't have reasons yet. No reasons to short this yet. Nope, it's still bullish. Market structure is still bullish. So my desire to short this stops at this time frame. The H4 is not telling me to look for shorts. So that's it. I stopped there. But it's a great place. It's a great trade. If it it forms, then it's let me see, it's Kiwi dollar. Kiwi dollar is the trade, the pair, I mean. And it was asked by someone in the chat, Vinny. I think it was Vinny, wasn't it? I think it was Vinny. Okay, let's continue. Yes, it was Vinny. So Vinny, I would wait for the H4 to start switching over, and then thinking of a possible short. Actually, you didn't even say anything about the short, so maybe I just imagined that. But I wouldn't go long either at this moment, right? This has been so bullish. I mean, on the lower time frame, you can still catch some good movements, perhaps as it was breaking this line, right? But that's already gone, right? So if you want to take a little scalp in the momentum, then I can see that you can front run that breakout, but that's already happened. So I wouldn't be too eager on trading that. Let's take a look. In any case, the H4 is not switching bearish. There was an H2 that was one way to catch your long if you were looking for a long, and you could have been looking for a quasi in here. This would be the head, the neckline, and beautiful. This is a beautiful one. Don't know if you catch this, Vinny. Look at that. That's the 5-minute entry. This is the quasi. The quasi is this. There, it goes all the way up and then goes down into one. This is the first one, and then the second one. The first one, you can see it never really even didn't care about that order block, right? Very easy. It doesn't react to it. We don't trade it, right? So you don't have to lose sleep over it. It's not reacting off of it. Comes the second one. You can see it on the lower time frame, how the market switches here, and you can start looking for that long as the market starts breaking up, right? It creates an engulfing, and there's a bearish order block here on the 1 minute that gets taken out right here, and then you can start thinking, okay, market breaks the structure. So now I want to go long, but I want to be looking for a way to get in. Where do we get in? You can start looking for the retest of this order block as it moves out. That would be one. And the other one is the order block it left behind, right? Left an order block behind. And that's a perfect entry. Look at that. Comes back into that order block, boom, goes away. There's many entry models to go long. You just have to know. Now we have hit a 5-minute structure. Now we are switching over from the 1 minute. What do I want to be looking for? Beautiful. All right. I can see. I would here on the lower time frames I could go long, but on the as a day trade, to hold it all day long, right now is the market has already, to me, made its move 40 pips out of 46. Yeah, still has a little bit, but not too much left in its tank, so to speak. That's Kiwi dollar. All right. How are we with the Remy? How are we? Remy's our producer in the background. How are we doing on the subscribers? We have 95.8 thousand subscribers, so we still need 4,200. Hit the like buttons, guys. Subscribe to the channel because it's gonna be massive. It's gonna be absolutely massive when we hit 100K subscribers. You'd be very happy you hit subscribers button. You're gonna have chances to win free accounts left, right, and center. You wanna be part of that. Okay, that's Kiwi dollar. We have something else in the chat. Nico is asking, can I short dollar yen after closing of the 30-minute candle? My friend, let's take a look. You shouldn't be waiting for me to get your entries, right? You should be following your trade plan, and I'm sure you do. But I'm thinking you want some, some traders confluence, right? See if someone else is agreeing with the idea, because that could give you a little bit of a confidence. Although you should just collect your data and follow the plan. But I get you. You want to get another trader's opinion on it. Okay, so we have on the monthly time frame, we created a fresh order block on the monthly here, right? We created it here, hitting the order block, the bearish one below us, above us. It goes back and it moves away from it. Where does it go to? The order block that's still standing, right there. And look at the reaction we had lately. So that's a nice reaction. Look at this outside bar, very very strong reaction from the monthly structure. Okay, that's fine, but we can't trade that. On the weekly, we had a sellers coming in on this candle, right? So that could be your signal to go short. This pair, you have a weekly quasi. That tells me that if the market, and actually let me look at other pairs, dollar yen. This is let's take a look at this one. Yep. Okay, so it is. Yes, we can consider this a fresh order block. Weekly, you don't have to wait for the market to reach it to short it. And you can see how it broke the bullish, or it is breaking it. Okay, so that I don't understand. This order block is not a weekly structure, is it? Oh, okay. See, I do get it. It's around here. That's the structure, but that has been taken out, so we can take that out as well. It hasn't invalidated, so we clean this. Okay, no problem. So we do have a reaction of this monthly structure. On the weekly time frame, we have a quasi actually from the left, right? A quasi which is basically this, which is coming now for, this is the first right shoulder, but was nothing here to trade it from. And since we haven't taken out that low, this would be considered the second right shoulder, and that is still tradable for this as the move. So I would target this. I know it sounds extreme now. It's the other side of the range, but you don't have to wait for that ultimate target. You can target something in between that makes a lot of some more sense, because we have structures here up there. I mean, before we get to the extreme of the range. So we did get a indication that the sellers came in. So you want to be looking for that short on dollar yen. That was after the interest rate decision of the Bank of Japan. That's this big candle. With a gap down on the weekend gap down. The daily, we have the quasi being activated here, and that would leave us with this structure. Although with the current momentum, it looks like we're not going to be retesting that order block, but that would be something, certainly, if the market were to come back, you want to be taking a short from this level and then targeting at least this on the daily, and possibly even lower on the weekly and so on. As long as the weekly is also still confirming, you'll be targeting something like that. That'd be awesome, but we have to wait for the price to reach this. Let me put an alert there, because that's a great area to be shorting. Right now, shorting on, the question was to short it. ATR 121, current day is 200, so that's stretched as well. I wouldn't want to be shorting it from that perspective. I would wait for the day, for tomorrow, for it to come back to reach something, close the gap perhaps, and then trying to come back lower. Maybe something like that starts breaking down, then I want to go down. On the 30-minute, okay, I can see that. That was the last supply zone, and it came back and reacted to it nicely. Okay, so there is a little case here to be made to go short. Yes, I see that, Nico. I wasn't too eager to admit it, but now I see it. Yeah. But the thing is, the supply zone was up here, not down here. Now we're getting into demand zone. So, it can continue, but there's that quite nice probability that it will, start ping-ponging and perhaps later on go lower. So, because the ATR is already expanded, it's not very likely that price today will continue to go much lower. It can, but I think it already made the move of today. If I to go short, I would be looking for structures on the hourlies that have overlap, and we already, maybe the time you mentioned this, that was 44 minutes ago. Okay, so that was a long time ago. 44 minutes ago. Let's measure that, when there was. Okay, so that was around here at 21 over the hour and at 90. Okay, so you wanted to go short around here. All right, so it does make some sense, as price was leaving the structure, heading towards the next one. I can see that. Sure, I can see that. that little move. If that was what you were looking for, sure, yeah, that was a. I know I answered it 44 minutes later, but it would make sense back then. But and you can still hold it as long as the market keeps on breaking down and respecting various structures. But the closer it gets to these, the more it squeezes this order block, the less likely it chance it has of continuing lower, and the more likely it is that it will have some kind of a pop. Even if later you'd be right, you'd be standing in not a lot, but some pain in the process. So it's not great to go short from, ideally, from the level before it came back. This level, that was the level to be shorting it, and taking little pieces of the pie before it hits the next structure. That makes sense to me, but it already reached it. So to me, I would be already out, yeah, or be looking for look at that on the 1 hour. Look at the reaction it has on the 1 hour order block. Look at that. That's a reason for me to get out. When it has a reaction like this from the 1 hour order block, look at that. Right? Market comes back to the order block. It's a fresh order block. 1, 2, 3. On the fourth candle, comes back and has that reaction. It can only be a reaction and continues lower. But what if it's not only a reaction, it goes all the way back to the next structure. You want to be out of these trades quickly when when you're in a short and it hits demand zone, you see a reaction. It's better to be safe than sorry. All right. Hopefully that was helpful for all of you guys. We have on the Discord community, we have the workshop coming up in about 40 minutes. You don't want to miss that. It's going to be fun. We're going to be talking further on the market, what it is to be a trader, and our daily experiences in there. You can talk actively as well there, interact with us on the Discord community, all for free. Just have to be have an account to have a dashboard. If you have a dashboard, in there you'll find on the lower, it's actually, I think now it's the upper left corner, you'll see an icon, the Discord icons, for you to get in on our great community. Don't forget to like and subscribe to our channel. We are on a mission for 100K subscribers and reaching more traders just like you, to help them become better traders every day. And that's that's our mission. I thank you all for your attention, and I would like to invite you for tomorrow. Tomorrow we have another great session here at the Fivers, the live trading room, where we'll be doing live trades and build and breaking down the. I was gonna say breaking down, right? Breaking down the charts. Instead, I said build. Build your setups, breaking down the technical analysis, top down, and then bottom up the management. So I hope you are going to be there so we can share this experience together. Take care, and thank you very much. Bye-bye.